think you can tell heaven from hell? Blue skies from pain. Can you tell a green field from a cold steel rail? Fire from a veil. Do you think you can tell? Did they get you to tell your heroes and ghosts? Hot ashes for trees, hot air for the cool breeze, cold comfort for shade. Did you change? Walk on past the road, the hero in a cave. How I wish, how I wish you were here. You just you my soul swimming in a fishbowl. Here I begin, running over the wish you were here. Good morning, Puncher. How are you today?
Any better, and I couldn't stand it. Dark, how you doing, buddy?
Doing good, man. Just two lost souls swimming in a fishbowl year after year. That
I love
story,
that song.
yeah, it doesn't get any better than that. That's Mrs. Lightside and I's favorite line, man. We feel like that's us. Eric Rice, how are you, my friend?
Morning, everybody. How are you, brother?
I'm good. I'm excited for today's show. This is going to be fun. I'm really ready to dig in, but we'll let people file in. Thomas, top of the day to you.
Hey, how you doing, guys? Looking forward to it. I got a couple questions that I hope we can get answered, and people who know more about it than I do.
Yeah, well, we all have questions, man. I don't know anybody really knows it real well, but we have some good theses that we want to present today and take the kind of conversation in a fun, a little bit different area. But it's always interesting to speculate on what the future brings, ain't it?
Yeah, I mean, it's exciting. Uh, I think we as humans we want to have some level of certainty, and and so we speculate about what the future is. But I think it's we also are smart enough to know that we don't know what the future holds. And I would say if you pick a time frame in the future, 2027, just pick a time like that and say, when we look back from 2027, um, it may be obvious what happened in hindsight, but I will just say from today's paradigm, we will be surprised at what 27 or 28 looks like.
Yeah, I couldn't agree more. I think that's spot on. Terrence, how'd the show go? We saw you emceeing up in Portland. Are you still up there?
No, I'm back. I missed, of course, 3 or 4 days of spaces, so I'm excited to see where the conversation's going. But yeah, it was, as we all know, it's just so nice to get out of your element and away from your town where you're forced to, eat and drink and collaborate and convene with all these great Bitcoiners and got to spend some time with Eric Rice, which was amazing. Had not spent that much time with him before, and my gosh, what an intellectual, what a smart, well balanced guy. Like, he's just a wealth of knowledge. It's incredible. So that was fun to discover. But yeah, but I'm glad to be back. I have some questions and comments based on your title, Dark, but I'm sure you're going to dig in. So here to
Yeah,
learn.
yeah, that Eric Grace guy. He's the smartest guy in a hoodie I've ever met. That's well. Eric, don't give me a thumbs down, man. How you doing? Top of the day to you. Did you enjoy Portland?
I did, man. It. Terrence hit it on the head. It's nice to get out of your comfort zone and just be around great people. There's a lot of great talks there too. Self custody, macro, what people see from the future. I really liked Eric Yakes. His overall market commentary was really really good. And just meeting people that are like you. I mean, there were like, self custody psychos there everywhere. It was really cool. It's always cool. I mean, Portland's not my scene. If you follow me at all,
Yeah, no,
you probably know that. But it
that's
was it was cool to be in a dystopian nightmare around a lot of hopeful people who are looking towards the future. But I pray for Portland, guys. Pray for Portland.
that's funny, man. Oil and water for sure. Jesse, how are you, sir?
What's up, everybody? Man, I missed my Bitcoin family. Moved into a new place. I got my new place set up, but happy to be here with some philosophers, some intellectuals, some critical thinkers. Very excited.
Cool. Cool. We're waiting for Marilyn to join us. Oh, sorry. Wrong
I will
button.
also plus one on the Eric statements. I've had enough time personally with Eric just to say the same thing. He's an incredible human being.
Oh, geez, can we move on to a different topic, please?
Yeah, let's
Let's get
discuss
back
how
to stable
smart.
coins.
No, no. Let's discuss how smart Eric is.
No, 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 no.
No, no, no. All right. What do you think, Punch? Should we jump right in, or you want to kind of continue just shooting the crap for a little bit?
Well, let me try to tee it up. So, what was the Quan guy? What was the
Ambassador of Quan.
ambassador of Quan? So I guess that was maybe Friday night. We were on a space. Maryland was on, and they're awesome. They're just great, nice people. They're new to spaces, so they're figuring out their formula. But they're just they're really really curious, and they ask great questions. And I think a lot of the people on it are just Christian folks from his church, I would guess. If he has a church, I don't even know. But the questions were great, and then Bit Petro jumped in and gave an interesting thesis. I don't know if it's his or it was derived from things that he was reading on X, but we got to the point where we figured out potentially a way that stable coins could accomplish a few things. One of which is obviously U.S. dollar ubiquity around the world, to the extent that there's countries that would play in that space, which is one of the stated goals of the administration. Right, dollar dominance is the way they describe it, and then how stablecoins could effectively cut out the Fed and a lot of these zombie banks. And after talking through that, I was thinking about it over the weekend, as I'm sure you will, Dark and Maryland and others. And it just seems like, unless we're missing something, this could potentially be a way. And if you understand Donald Trump and his admiration of Andrew Jackson, who loathed central banking and warned against central banking ad nauseum, that this could be a way to kind of circumvent central banks and kind of help fix the system to some extent. So that's just a very, very high level. And maybe I'll turn it over to you to take it from there.
All right. I think that's a really good setup, Puncher. Let me kind of back up a little bit. I think this is coming out of a really smart lady who I've been doing some research on, Dr. Pippa Malmgren. Uh, it's Dr. Pippa Malmgren, Pippa Malmgren. She is, let me kind of give you her bio real quick. She writes a Substack where she writes on economics, geopolitics, and tech. She's an award-winning author and a former U.S. presidential advisor. She lists Washington, D.C. as her home. I think we'd love to get her on one day as a guest. That maybe that should be a goal of ours. But I kind of started to dig into this research last night, so a little bit too late to reach out to her. I did send her a link, but I have not made contact with her. Okay, so let's walk through this. Let's kind of start it at one. Key points. Okay, so what is a stablecoin? A stablecoin, as everyone knows, is a US dollar. It's an asset backed one-to-one by Treasury securities, and they enable fully reserved banking. Now, individuals can hold stablecoins. And in doing so, the thesis goes that as a stablecoin holder, you become senior in the capital structure. Now, we've talked about senior in the capital structure a whole bunch of times as it relates to MicroStrategy and different companies, but we rarely ever discuss senior in the capital structure as it relates to countries. But it exists in both facets, right? Certain debt is worth more than other debt, and that's because it is almost guaranteed to get paid, whereas other debts may not be guaranteed to get paid. Now, in the case of governments, that tends not to be the case. But if you consider this thesis, I think you'll understand where we're going with this. Okay, so where does this lead us? It leads us into a two-tier banking system, right? One tier is banks that own stablecoins and that bank stablecoins. These banks would essentially be fully reserved banks because stablecoins are fully reserved. The second tier would be fractional reserve banks, the type of banks we have today. And we know that the banks we have today are holding a metric shit ton, excuse my language, of non-performing assets, bad loans, all the commercial real estate we talk about. We don't even understand what a bank's balance sheet looks like because they don't provide, modern banks do not provide line item detail of their assets. Um, what's the Treasury's role in all this? That's where this gets really interesting. So currently, we have a Federal Reserve System where the Fed issues debt, the banks buy the debt, foreigners buy the debt. Again, a very opaque system. Nobody really understands how the Federal Reserve works, and that's because they're a private institution and they don't provide transparency. In a stablecoin world, we have the thesis speculates that there really is no reason for a Fed, right? Why would you need a Fed if the Treasury itself can issue debt directly to the stablecoin providers and create money that way, right? It's a really interesting concept. This is as groundbreaking as it gets because as we all know, the world kind of functions off of U.S. Treasury debt. And if the thesis goes that U.S. Treasury debt will be replaced by stable coins, then the world will now function off some new type of debt because the U.S. Treasury will not be in the business of creating debt the way it's created today through the Federal Reserve. Let's see. Okay, so how does this work to reduce inflation pressures? Uh, so unlike fractional reserve banking, which fuels asset bubbles, and now we're going to kind of meander into the Richard Werner's um, interview with Tucker Carlson. One thing we learned from that interview, and everybody who watched it knows, that Werner says that there are three types of credit creation, right? And he goes deep into how banks, right, really are the ones who are printing the money. It's not, while the government prints money, that's minute compared to the way banks print money. Banks create credit, and they're given a license to do so through an accounting gimmick that the U.S. government, well, I guess banks concocted long before the U.S. government. I guess this goes back to the original Bank of England, and was the basis of double entry accounting. Right? If the bank creates a debt, that becomes a liability, right? And then they make that loan becomes an asset. Therefore, you have an asset and a liability, but the money was created out of thin air. It's very fascinating. Again, if anyone hasn't watched Werner with Tucker Carlson, that's an absolute must watch to get yourself up to speed on what's really going on. Now, he kind of doesn't speculate. He walks you through three types of credit creation. There's credit creation that's used to buy financial assets, real estate, financial products, and that is non-productive, meaning it does not add to GDP. It just serves to inflate asset prices. And then in turn, inflated asset prices continue to inflate everything because as people have wealth, they can borrow against that wealth. And that gets to our second type of credit creation, which is consumer credit. Again, consumer credit does not create GDP. It does not add to goods and services in the economy. It simply serves to make people feel wealthy through their ability to borrow and buy things. But in the end, consumer credit leads to nothing but inflation. And then there's a third type of credit creation, which is credit creation for productive means, investments in business, investments in technology. That does add to GDP. That is productive. That is good credit creation in his mind. And then from there, he kind of lays out that 85% of the credit that's created by banks is for the non-productive means, for consumer inflation through consumer loans or through asset inflation through asset loans. And banks prefer to make these types of loans because they tend to be collateralized, right? Either collateralized by the assets you hold or collateralized by the asset themselves. And when you make a loan for a business, and Puncher's walked through this in great detail when he's tried to get loans to start businesses. The banks don't want to make those loans because they tend to be uncollateralized as the business doesn't exist yet.
Dark.
Now,
I
yes,
don't
sir.
want I don't want to stop your train of thought, but can you talk very quickly when Werner discovered this and he wrote a book and he subsequently was going to have that book translated from Japanese, in which he originally wrote it, into the United States. He got a visit from some people. You want to talk about that?
Yeah, so Werner lays out how he writes this book, and the book was a genesis of his time in Japan. He's fluent in Japanese. He was working at very high levels inside of the biggest of Japanese banks and working with the Japanese government. And this is going back into the late 80s, early 90s when Japan had the mother of all bubbles. I think the Nikkei went from 40,000 down to 4,000 when the bubble broke. At one point, the land around the Imperial Palace in Tokyo was worth more than the entire state of California. That's how big their bubble got. And he tried to figure out why that happened. And he determined it was through this credit creation by banks, not by money printing by the government. And he writes a book. I think it's the Princess of the Yen and the Yen. He has the book. The book goes to #1 in Japan. It's a bestseller. It's bigger than Harry Potter, which came out at the time. Literally every Japanese citizen's reading this book, trying to understand what just happened to them. And he then has it translated into English. He contracts with a large American publisher, and then to Puncher's point, in comes the CIA. They send over a member of the State Department who informs him that the CIA is watching him. I think that's the exact line he used. And he finds out that the book then will not be translated into English. And as far as I know, one of the first people to be formally canceled by the US government, Richard Werner, finds that nobody will publish his book in America. He becomes persona non grata in sort of the academic world. He then, at some point, runs into Greenspan at a conference that was being held in Hong Kong. And Greenspan, he walks over to Greenspan. He says, I wrote a book, The Princess of the Yen. And he is introducing himself. And Greenspan knows exactly who he is. and says, the credit creation guy. And it was at that point that he realized that he had been canceled by the Federal Reserve themselves. Um, just wild, right? The entire story is over the top, Puncher.
Yeah, yeah, and I just thought that was important because he's stumbled upon something that has been kept essentially secret from academia, right? If you went to college and you studied macroeconomics, they never discuss banks. I don't remember that. They blow them off as some kind of intermediary where you make deposits and then they fractionally reserve and then they can make loans based on those deposits. We now know that that's not true. There is no limit on the amount of credit creation banks can make, but it is odd that you talk, even in the highest levels of academic endeavor, you never learn about the functionality of banks, probably the most important function ever. It's just chaffed off as a non-event or a non-entity, and I think that's for a reason.
Yeah, and let's walk through that, Puncher. So why is it that banks don't serve, according to modern economics, banks do not serve a role in the U.S. economy? And that's because modern economics considers banks, as Puncher brilliantly points out, as intermediaries, meaning that they take in deposits and they make loans, right? And therefore, they don't really serve a role in modern economics because they're simply an intermediary, right? They take in money from people and they make loans from the money they have. But we know that's not true. It's not true at all. They're actually the engine of printing money. They create credit, right? They don't have the money. They're not intermediaries. They are the engine of credit. And therefore, banks are probably the most important uh, participant in modern economics, yet modern economics completely ignores their role, and they use the term intermediary as a way to say, well, banks don't count because they simply borrow and lend the money that they borrow, and we all know that's not true. That's not even
Can you
close to
guys
true.
pause? Can you guys pause here to take a couple of questions? I've got my hand up and Fred's got his hand up.
Yeah,
My question, I'm
absolutely.
sure, but Fred had his hand up first. So
Yeah,
whenever
and that's
ready.
just as a side note, Tomer, and then we'll go to Hans because it's a good spot to do so. Keynes, the father of modern economics, also came to this insight earlier in his career and then suddenly has a change of heart about it and goes in a completely opposite direction. I'll stop there.
And then becomes extremely wealthy.
No, he actually becomes a central banker, right? He goes further than becomes wealthy. He becomes co-opted. And
So
so
is
do other very famous economists that come to this realization. So yeah, before we go to Fred, I'll land the plane here. It becomes very clear that there is a concerted effort by the powers that be, both inside the Fed and inside the government, to shut this message down, which I find really, really interesting, right? And everybody should, because whenever they try to silence you, you probably have something very important to say. Fred, what's going on, brother? How you doing today?
Doing good. Hey, listen, I posted something just like 10 minutes ago. I really had a front row seat to this. What's happening in Japan? If you could humor me, I'd like to give you a little bit of background because I was really there, and I almost even more so than Richard Werner. I had a front row seat to this. Let me explain why. So I joined Solomon Brothers in 1986, and I was working on the ARB desk and the international ARB, right? So I was, it was mainly domestic, but they had me and this other guy, and we were a few other guys, and they had an ARB desk in London as well, and we were focused on international ARB opportunities. I was focused very heavily on Japan when I was at Solomon. So I used to go there all the time. I I did a tremendous amount of business in yen currency swaps and yen swaptions and other things like that. So I had a front row seat at Solomon Brothers, and then I left Solomon Brothers to get a very unique opportunity because the Japanese banks saw what we were doing at Solomon, all the money we were making, and they wanted to do the same thing. They didn't know what we were doing. So I joined this company called Greenwich Capital, which was owned by the long-term credit bank of Japan. And LTCB said, Fred, we are going to give you our swap lines. We're going to give you access to the LTCB credit lines. And LTCB at that point was larger than any American bank and larger than any European bank. Okay, the size of it was so enormous, you just can't imagine. And I met with the top guys, the head of trading all the time at LTCB. So I had this front row seat into what LTCB was, what the bank was, how they were doing, what the hell they were doing in Japan. And I can tell you, he's right in the sense that yes, the banks definitely created this bubble, and it was a bubble of monstrous proportions. So definitely that is true. The banks did create it. Um, it also is true that this happened when the bubble popped in 1991. It happened 6 years after this Plaza Accord, right? Which was James Baker was everybody was very upset at Japan and how well they were doing. And they felt, just like people are now saying we have this problem with these trade imbalances, America was saying we have to have Japan strengthen their currency. We need the US dollar to depreciate. So it's not inconceivable that the CIA was also involved. And so I'll stop there because I could just go on forever and ever about this topic. But let me tell you, I spent 6 years in the belly of the beast with Japanese major financial institutions. Nomura, I mean, knew all those guys, LTCB, Sumitomo, Mitsubishi. I knew I was dealing with these banks a lot, and I can tell you that the danger I see is something like this happening in Bitcoin as well. And I just the only thing I would say is once you have this massive leverage pop, you don't put Humpty Dumpty together again. So just think about that.
Thanks, Fred. And we'll definitely come back to you as we go through this. Tomer.
Yeah, I guess for me, I just had some clarifying questions. I didn't have a front row seat to any of this, but it is that revelation that you guys were talking about and trying to get an understanding of it. Like the traditional interpretation of fractional reserve banking was the bank has a bunch of depositors, they deposit a ton of gold into the bank. The bank knows that they're not all going to come for their ton of gold at once, so they lend out half of the ton of gold with the ready to redeem demand withdrawals from half of their clients, but they lend out half of it, and so you get some credit creation. But what the more modern interpretation is because it's not gold anymore that they're lending out; it's paper or no, just contracts that say that people have money and people trade the contracts as though they were real. That there's actual money creation and money printing taking place by the banks, and in a sense, it's unlimited. It's unrestrained by the fraction, what the traditional meaning of fractional reserves means, and so when you live in a world where the banks themselves are printing money, how can we have a financial crisis where a bank is going out of business because they could just print money? They can just print money, and so to me, there's this whole bizarreness, this nonsense of the behind the system. Nobody understands what the Federal Reserve is. Nobody understands even within it how it runs. The closest thing I've had to a front row seat was the last company that I worked for before I got in full time into Bitcoin. Actually had the Federal Reserve as one of its clients. We taught the skills of emotional intelligence to companies in finance and STEM. But I remember going to one of the keynotes that we delivered and sitting next to somebody there. And he was also nervous because he'd been promoted to manager and he didn't know exactly what he was supposed to present on. And it was just a great deal of confusion. And it makes sense because when you're working in something that doesn't make sense, you're going to be very confused. and and so this to me is kind of like the unraveling of questions, like in the sense of what the hell is actually going on and what rules, if any, does anybody in the finance industry play by?
Huh. These are good questions. Fred, is your hand still up or did you have something to add?
I'll let Thomas go first because he was there first.
You got it, Thomas.
Yeah, so I really enjoy watching or listening to that interview, and did a little bit of research about who the hell is this guy, and why are we hearing about this for the first time? Something that's so foundational, immediately I want to know, you know, I mean, the story is so almost fantastical. Like how could um, how could this not be a debate that's been going on for a while? It felt a little bit like an odd reveal, and I'm thinking, is this guy some kind of crank? Who the hell is this guy? And why would we go this? So this idea that the banks are simply intermediary agents uh, is the pervasive one, and we don't even question it. And so I really do want to get into this issue. There were two things that I thought is like, are they really, because of the double entry accounting and the way that they set up the accounting for banks, and different for banks than corporate entities, where banks can basically issue credit at will. And what his public policy determination after doing that, because it's interesting. Warner is not anti-central bank. He's anti-central bank with centralization policy. If you had central banks as a backstop distributing it to local banks, he thinks that we need a lot more local and small banks. That credit creation is good for the economy. So, so I want to know more about that. The second thing I thought was interesting is he talked about the toxic asset clear up, and basically that the interbank cleanup of the balance sheets has no effect on the economy other than just clearing out stuff. And I didn't understand how that could work, because it felt like a free lunch to me. Like, he kind of glossed over it. He said if we just bought the toxic assets, the Fed just bought toxic assets like in TARP, and just said, all right, we bought them and that's it, that would have no effect on the economy other than just make the banks and put in a better position to lend out money. And I thought that didn't make sense to me. And I'm not discounting what he said. It struck me as odd. So those are two things I'd like to explore in a little bit more detail. Why is this double entry accounting allow for banks to issue unlimited credit, and essentially, and how is this toxic asset clear out something that can be done in the central banking system that can't be done elsewhere?
Yeah, I think great points, Thomas. And I want to touch on both of those. Eric, let's go to you, and then I'm going to go back and touch on Thomas's 2 points.
Oh, Fred was before me. Go ahead, Fred.
Yeah. So Thomas, I think one of the things that people don't understand is that a lot of this is not just due to fiat. This is this is how the fractional banking system works, right? And it's worked like this before 1971 as well, right? Which is banks. Your model's not completely incorrect, but it's not as simple as people pool the money and they do this. They can create money on their ledger, right? And then if somebody says, okay, well, let's just take a real simple example, right? So somebody says, I Bob deposits, $1,000 at the bank, and Alice wants a loan. Okay, so Alice comes and says, I want a loan for, you know, $100, and the bank just says, great, here's your loan. We'll credit your account, and we'll put our the reverse side of that, which is $100, on our balance sheet. Now, if Alice wants the actual money to move to another bank, they say, great, no problem. What we'll do is we'll send that to the other bank, and we'll move from the reserve account at the Federal Reserve. That's what they do, right? So there's this system of interbank lending that you really need to understand to understand how this works. And this, basically, the interest rate that the Fed can manipulate is the interest rate on overnight funds, right? So that's the key variable that the Fed has. The Fed can move that interest rate. When they lower that interest rate, it's much easier to get reserves, and people make loans. Now, I would say right now they can make loans at will. However, they are subject to bank regulatory ratios. And so they're actually not making as much loans as they did before 2008, actually. So the banks are actually, we're seeing base money grow at a 13% rate, but actually M2, which is the sort of the money that causes inflation, that's really only growing at a 7% rate in the US. In China, it's a different story.
All right, let's
I
just
don't know
back
if
up
that made any sense, but
Yeah, no,
that
it does.
it's a complicated thing, right? This is not as simple as banks print money. There's Banks are subject to banking regulations, right? Banks can create money subject to them being within the regulations, the right, and subject for them to have the appetite to create money, which right now they're playing it very conservative, most of these banks.
But it
Yeah,
is
I
still
think
modern day alchemy.
yeah, and just to touch on that, Fred, that assumes that the banks are being honest, and they're not. For instance, commercial real estate still held on the books at prices that we know are completely unjustified, and that
Well,
helps
it's
pad
also
those ratios.
the regulators are kind of looking the other way, right?
Of course,
So,
yeah.
it's basically a case of you have the the central banks, the regulators, and the banks, all three of them kind of working in unison, and all three of them hate Bitcoin, right? All three of them absolutely cannot stand Bitcoin. So when you say they play no role, they play a role in the current fiat system. They do, right? The current fiat system is jiggered this way. And in my view, we're going to have the current fiat system for the next 30 years. Now, we're also going to have Bitcoin. Bitcoin's going to grow an important part, but I think it's unlikely that we hyper Bitcoinize within the next 20 years. I really do. I just, it's not going to happen. I don't see it. So I think we're in this fiat system. I think Bitcoin's going to do extremely well as an asset within this fiat system. But that's kind of my view, and that's probably where I differ from probably your view, Dark, or views maybe of some people like Larry Lepard. I don't see that we're getting away from the fiat system. So I think we, instead of saying it's just bad, we got to live with it. I mean, it's there, unfortunately.
Well, we're putting the cart before the horse a little bit. We'll get to all this, uh, but I think maybe with a couple more questions, maybe we'll let Dark continue on his kind of exploration of just what it is, and then we can talk maybe about how it might be coming toward a new system.
Yep. Thank you, Puncher. And before we take any more questions, let me just kind of go back to Thomas's questions. So Thomas asked two questions. One about the latter question about modern day QE, excuse me. And Werner, I believe, is the father of modern day QE and was the first one to write about it. And
He is the inventor of QE. He
that's right.
literally coined the term.
Yeah, he coined the term, and this is where I depart from Werner because what he doesn't say. So just quickly, what is QE? QE is this concept that banks can take bad loans, right? When they get in trouble and they have too much non-performing assets, they can take those non-performing assets. The Fed can buy them from them, right? And pay face value for those non-performing loans and recapitalize the banks at will. And this has no effect on the modern economy, right? That's the basic just behind his QE. At any time, the Fed can go ahead and just buy these non-performing loans, give the banks full payment of them. The Federal Reserve then owns these non-performing loans. Who cares? The banks are then recapitalized and they can go back to making good loans. The problem there, as Thomas kind of alluded to, is that creates a tremendous malincentive in the economy to make bad loans, right? And he didn't go there. I'm surprised Tucker didn't say, "Hey, wait a minute. If you do that, then why would they ever make good loans? They would just continually make bad loans." Now,
The bad loans
to
go to bad loan heaven.
that's right. But what's interesting about that is if those bad loans were all productive loans, then I can almost buy this argument, right? Because there'd be so much job creation, so much stimulation of the economy that, okay, bad loans get absorbed by society through monetization, but that's still a net huge win for society because these loans are so productive, and we want the banks to have some level of backstop on the loan, on these good loans that they're making. Again, it's all part of a broken system, but QE for the right reason, I think could make sense, but QE for the wrong reason, i.e., buying bad loans that were non-productive, right? That just incentivizes people to make more bad loans, which are unproductive. So I think that's point one. And then point two, Thomas, I just want to go back to a little story Werner told, going back well before the United States to, I think it was England with the creation of goldsmiths, right? So they were on a gold backed economy. People wanted to have gold. And uh, they figured out at some point that having gold was dangerous because it created a potential uh, uh, place to be, a potential avenue to be robbed, right? It could create violence, etc. So there were happened to be goldsmiths, right? Mostly jewelers, and they had big safes and they had security. So people decided to deposit their gold with goldsmiths, and the goldsmith would in turn write them a depository receipt. And that depository receipt, meaning the receipt that you had gold at the bank, became useful in actually transacting, as people would accept depository receipts as money, right? And thus the creation of sort of a level of a system in which the gold became centralized with the goldsmith, and you would walk around with depository receipts and be able to trade them for goods and services. But then one of the goldsmiths figured out that, well, these loans, all of these depository receipts, they didn't have interest because it was against the Christian religion at the time to charge interest. So what they did was they said to got one day a guy comes in and he says, I need 30 grams of gold. I need this, I need to borrow, I need a loan. And the goldsmith figures out, I'm going to give you the 30 grams of gold. And then what you're going to do is you're going to give it right back to me. And I'm going to give you a depository receipt. So I'm going to make you a loan of 30 grams of gold, but you're not going to take the gold out of the store with you. You're just going to hand it back to me and I'm going to give you a depository receipt. And thus became the creation of fake gold or paper gold, right? Because when the guy walked into the store, he didn't have any gold. When he walked out of the store, he didn't have any gold, but he did have this depository receipt, which was a loan created by the goldsmith, which was a loan essentially created out of thin air, right? And that was the modern creation of some level of fractional reserve lending, and that's sort of how it came to be. So when you consider like that transaction and what the goldsmiths were able to figure out, you can kind of follow that forward to how that went completely wrong, and you ended up in 1971, where the United States, with all the gold, didn't have enough gold, so they just said, "Well, meet our navy." They told the French, "You can go ahead and you can pound sand. We're not giving you any gold." So I hope that helps, Thomas. Maryland, how you doing today?
Doing good, Dark. Sorry, it took me a few minutes to get here. I'm just keep on going. I have some thoughts I'll save for a little later.
All right, sounds good, brother. Glad you're here. All right, so kind of picking up the story. So we have this new thing called stable coins. These stable coins we know have been created to be a form of a fully reserved state-backed asset. So it's backed by one to one by treasuries. And I mentioned earlier that the capital structure in corporations matters, right? Certain debt has priorities over other debt. And where we're headed with this is that if you own a stable coin, which is one to one backed, okay, then arguably you are senior in the capital structure of the United States, to a fractional reserve bank, which does not have its assets backed 1 to 1. And that becomes an interesting dichotomy. How can stablecoins exist in the system parallel to modern day banks? Right? You're left scratching your head. Why in the world would anybody have money in JP Morgan when they could have money in USDC? One is fully reserved, meaning you know that USDC has the debt to back the dollar that you hold, whereas JP Morgan, does not have the debt to back the dollar that you hold. Now, of course, this is making some huge assumptions that everybody in the system is playing honestly and the regulators are doing their job. But for the purpose of this argument, we have no other choice but to make those assumptions. So if USDC has 1 to 1 banking, 1 to 1 reserves, and the bank, your local bank, does not, I would ask the question of anybody up here, why in the world would you keep your money in the bank when you can keep your money in the stablecoin? Dave W., I missed you the other night when we had our little debate, but
Yeah.
how you
Sorry
doing?
about that. But wife takes precedence. I
Understood,
love your
sir.
brother, but yeah, there you go. Well, first of all, under the Genius Act, all the stable coins, it explicitly amends the bankruptcy code. So what you just said doesn't happen. So it doesn't matter whether J.P. Morgan issues a stable coin, Fred's local savings and loan issues a stable coin, or Amazon issues a stable coin. If it's a stable coin under the Genius Act, and it must be backed 1 to 1, and the holders of the stablecoin have rights to that asset in a bankruptcy senior to everybody else. So it changes the bankruptcy code so that they don't have the problem that you had with FTX, et cetera, et cetera, et cetera.
Wait,
So
wait, wait, Dave, let me stop you there. When you say that JP Morgan issues a stable coin, okay, and then it's senior in a bankruptcy,
yep.
senior to what?
Senior to everything means that if you're holding your money in a JP Morgan bank account as in a savings account, you have FDIC insurance for your first 250. After that, you're shit out of luck unless the government bails them out, which of course they would, and print a fuck ton of money to do it. We've already seen it with Silicon Valley Bank. We know how the game plays out. In truth, there's no real risk. But if you're asking the question, why does someone hold JP Morgan coin versus Tether versus USDC? The answer is based on the ancillary utility of said coin. There's no difference in bankruptcy. If you're asking the question of why would anyone hold in a conventional banking account anymore, it's a great question. I personally think that all conventional banking accounts, that stable coins will ultimately replace the checking account because, after all, they're a much better payment vehicle. And savings accounts that pay virtually no interest are going to go poof because people don't need to hold them anymore, right? You can hold them safely in other places and other assets, whatever. Money market funds, which already have eaten into stable, savings accounts a lot, become even easier when they're all tokenized and all the issuers allow, sweeping and in-depth movements. I mean, I posted about this extensively. So it's a real question of the crowding out effect that's going to happen is going to be traditional checking and savings accounts, which are pay no interest, which are really slow, which are very limited, are going to go away. They're going to be replaced by the modern technology.
And that's exactly where we're headed, Dave. If the question is not whether the stablecoin company goes bankrupt, the question is, what does the world look like once we adopt stablecoins? And to your point, there is no reason to have your money in a local bank, right? That is fractional reserve when you can own a stablecoin. One is demonstrably safer than the other. I would just make the point that yes, while Silicon Valley Bank was bailed out and we saw what happened there, that was, while a rather large conflagration, right? That was still considerably smaller than some type of massive banking crisis. But yes, and in some type of
Well,
massive
it
banking,
was well two points here. First, it was considerably smaller because the Fed pulled out a howitzer. The BTFP effectively said, "We got $4 trillion that says no banks are going to go. What are you going to do?" And all the people who were shorting basically were like, "Oh fuck!" And they covered their shorts, and that was that. So yeah, you pull out a $4 trillion howitzer, and guess what? You don't have to fire the howitzer. You just pull it out and say, "My gun's bigger than yours," and the markets all ran away, and that was that. But I think if the point you're making, because over the weekend I watched the Same Warner interview with Tucker, and I thought it was incredibly interesting in many respects. It's frankly, he helped me refine some of my own theories and probably deserves a deep dive. But if the point is that encouraging local expertise in local fractional reserve banking or local pools of capital to be able to fund businesses is important, and I think that it is, you're asking the question, well, does the stablecoin bill kill that? And the answer
No,
is
no,
is
not at all.
okay,
No,
cool. Because
no, not at
I
all.
think the answer is no, but it will kill some of it until people figure out how to adapt.
Yeah, no. So yeah, so kick back and hear this thesis out. I think you're going to enjoy it. All right, so we have these stable coins, they're fully reserved, and they're in a parallel economy with an existing banking system, which is fractionally reserved, which we all know that we can't even really trust the numbers that were being presented. Nobody has true visibility into what a bank's financial condition is because they don't provide us with line item detail of their assets and liabilities. They just give us a broad overview, and it's sort of a trust me, bro system. Now, at the same time, where do we go with these stable coins, right? This is where this gets exceptionally interesting. If the US government can issue dollars by via stable coins, and they can do so, and this is where this gets very kind of opaque, but hear us out on this. If they can do so, then why would they pay market interest rates to a company that has no risk? Right. So if you're USDC and you're currently earning 4.5%, 4.25% from the US government to issue a stable coin, and you're not taking any risk, you're simply a technology provider that prints the dollars. Think of them as they own the printing press, the digital printing press. Why in the world would they be paid 4.25% for the privilege, the license that we're giving them, the US is giving them to create the money?
Could I answer
It may,
that?
sure.
Yeah. So you're taking a three-dimensional situation and you're reducing it to two dimensions, and that's the problem here. So first of all, the U.S. isn't giving them a license to print money. They are right now one of the only games in town that will get competitive. So they create the stable coin, Tether does, and they have all these dollars. And what they do with the dollars is they invest in treasuries, which right now are yielding 4 and whatever percent. The reason Becent and co want more stablecoin issuers is because the more there are, the more the demand, the lower the yield will get. And so that's why the US government cares. Uh, the fact that people need an enormous amount of tether is because most of it's from overseas and most of it is from countries where people have a hard time, their currency controls. It's hard to move dollars in and out. It's hard to use them to buy things. And it's also really hard to buy crypto. And so what do? They one time take their currency, they exchange it at whatever rate they have to take to get to Tether. And now once they have it in Tether, now they're in the crypto ecosystem. They can buy and sell, et cetera. Or they can send dollars to or whoever the hell they want to around the world without paying their, local corruption or graft or whatever to get into the shadow economy. In the US with the stable coins, the idea is that, and it's not just the US, but in the US, the idea is that stablecoin issuers will be buying treasuries, whereas, which is kind of an infinite reserve ratio if you think about it. Because right now, banks that own treasuries are a part of it. Some of it goes into other stuff, and it's a much more pure way of forcing backing or forcing, buying of treasuries in order to have something to use for spending. And so that's what's going on. Now, if you think about that, and I think this is where you and I are going to agree, eventually the demand for this, for a zero interest product for payments, is going to be finite, and it's going to be smaller than the total demand right now that's in these very low interest or zero interest accounts, because the friction of payments and the speed of payments is going to increase. So the net of all of this is going to be a smaller amount of money as a percentage of the economy in non-interest bearing accounts. It's just going to take time for the technology that gets offered in product packaging around it from companies that allow you to capitalize on that.
Okay.
Does that make sense?
Okay. So, yeah, it does, of course. And, what Dave's presenting is a view of the future based on where we stand today, which is completely logical, right? I can't argue with the thing he said. But I'm going to present you a different concept of how this could play out, which is that the Treasury, rather than going through traditional means of issuing debt through the Fed, will then say to these stablecoin providers, okay, you want to buy bills, we're going to sell them to you at a half of 1%. Okay, we're just going to bypass the Federal Reserve and we're going to issue on the off the run treasury bills to you at a half of 1%. Now, if they do that, and that becomes the only place these treasury bills are available for the stablecoin companies, and that's what they have to buy, they're going to buy them because it's still a half of 1% that they're making out of thin air. A stablecoin, I think Tether has a few hundred employees. They make billions and billions of dollars in a very small market today. So the thesis here is that the Treasury makes an end run around the Fed, and they go ahead and they say to the stablecoin companies, we're going to issue you debt, but we're going to issue you it at this price. Okay. Now, what happens then? So we've already said that, well, my money would be better served being in stablecoins than being in some FDIC insured account. Right. And that becomes even more so true, right, as this process plays out, because what you're left with is you're left with a two-tiered banking system. You have one set of banks, which are the fractional reserve banks, and then you have this new set of banks, and this goes to Werner's point, that spring up, which are stablecoinist banks. They're fully reserved savings and loans that permeate throughout community banking, right? That then take your stable coins, they give you a savings account, but now you're getting 5% interest, real whatever the market rate determines it should be. And they then in turn take your stable coins and they loan them fully reserved. So you'd have a two-tier banking system. You'd have the old school fractional reserve banks, and you'd have this new school of community banks that are dealing in stable coins.
So I'm trying to figure out. I don't really understand why fractional reserve banking makes sense in the same way that AWS and a lot of virtual service providers make sense, right? There's all sorts of, we call it deep in the world of crypto, but the same notion. It is, there's nothing inherently wrong with some notion of fractional reserve banking for the purpose of business loans for mismatched durations, etc. Where it gets ridiculous is when fractional reserve banks can use it to speculate or buy assets or do other stuff that isn't well understood, and as a result, effectively due to the regulatory environment, make economic rent on all the people who put money there. I mean, there should be no reason why fractional reserve banking should be illegal. However, the way what it's morphed into is a cartel, and so there's all sorts of reasons and lots of risk controls. Yet, we also have an enormous federal bureaucracy and regulatory structure because of fractional reserve banking that wouldn't apply if they were fully reserved. So I don't understand why there has to be a shadow system. I mean, I think it's perfectly reasonable for a company to exist that says, listen, we're going to, you could say, call it take deposits, we're going to take investment dollars, whatever. We're going to lend out, a lot more of that and on the basis of our expertise, and we're going to generate a return, and we're going to give you some of that return. That's not how the business works today now. And so
Okay,
that's
let's tackle it, Dave. Okay, I'm gonna go to Puncher now, and I'm gonna hit you with another founding father series of quotes. I'm gonna start with Alexander Hamilton, first Secretary of the Treasury. Um, the intrinsic value of bank paper as money is nothing. Its value rests on the general opinion of its credit and the general custom of using it as money. Puncher, thoughts on Alexander Hamilton? And he was in favor of central banking.
Well, he's correct. And paper doesn't have any of the intrinsic values of what we would consider to be good money, the characteristics of good money, right? So I don't know what else to say other than I agree with him on that point.
Okay, now let's go to another famous president, not a founding father, but I think an important quote. Andrew Jackson, the bold effort, the bold effort the present bank had made to control the government are but premonitions of the fate that awaits the American people should they be deluded into a perpetuation of this institution or the establishment of another like it. And he's referring to central banking. And I'll just continue. You are a den of vipers and thieves. I intend to rout you out, and by the eternal God, I will rout you out. 1832. Punch?
Well, he didn't. Or he did for a
Well,
time.
he did for a
Well,
while.
he did for a while. And then in what can only be described as secrecy and legerdemain in 1913, while Congress was essentially recessed, a cabal of private bankers and probably co opted politicians managed to get the Federal Reserve Act passed.
And they did so under the cloak of darkness on December 23rd, right before the Christmas break, when most of the people had left to go home to be with their families. And they did so with some unique parliamentary procedures, so that that vote actually did not go through the standard parliamentary procedure. They used some tricks of the trade in DC at the time to go ahead and get that vote passed. So very good point, Puncher. One more that I'll throw at you, going to my favorite founding father, Thomas Jefferson. I sincerely believe with you the banking establishments are more dangerous than standing armies, and that the principle of spending money to be paid by posterity under the name of funding is but swindling futurity on a large scale. 1816. Punch?
Well, nothing but agreement, right? I mean, our founders were keenly aware, primarily because of their experience with the Bank of England, of the dangers of central banking and how that banking cabal, which controls money, would ultimately supersede a what they wanted was a very weak central government at the top of the food chain here in the United States. So again,
But Punch, wait a minute. This wasn't about central banking per se. This was about paper money. So
well,
he doesn't point to central banks. He points to banking establishments.
yeah. I listen. I can do nothing but agree.
Yeah, and this is where Dave and I kind of have a fundamental disagreement. I think fractional reserve banking is a modern sin, because in the end,
Well,
fractional one
hold
second,
on a
let,
minute.
let me finish. Let me
Okay.
finish. Fractional reserve banking gives a license to a non-government entity to print currency. Okay. Now, if we walked down the street and we asked 100 Americans who has the right to print the US dollar, right? I would think 99 of them would tell me the US government prints the US dollar. But in our modern system, in a system of fractional reserve banking, that's not true. Any bank can create credit, and
Okay. But
credit is money.
can we go back to the basics though? Look, getting me to take the side of I like debating, so I don't mind too badly. But getting me to try to take the side of defending the modern banking system is a reach, as you're well aware. I use words like cabal and cartel, you know, quite well. The but understand something. What is the difference between a fractional? And there is an answer to this question, by the way, and the answer is where we're going to end up in agreement. What is the difference between a fractional reserve bank and a company that whose business model is, hey, you buy equity in our company, give me equity capital, and I'm going to use that equity capital to make business loans to businesses, and I'm going to generate a return from those business loans. but you have no right to the capital immediately. You can sell the capital in the market because it's a stock and it's liquid and it's public. What's the difference in those two things? Because clearly you don't have a problem with a company that does it, right?
Well, if the company's creating credit, I do.
So
Yes.
you have a problem fundamentally with two people with a business entering into a transaction to offer a loan to another business using its own equity capital.
But Dave,
I think that's I
if
don't
that
really
loan,
think you want to be in that. I think that's you're certainly not a libertarian if you want to block that. You do not believe that credit should ever be
Well,
no,
available.
wait
no,
one
no,
second.
Dave,
When
Dave,
you say no, 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 no,
hang
no,
on,
Dave, if
time
they
out.
have, go ahead.
The loan that's made by a private company, if the loan goes bad, they eat the loss, or they retake the collateral if there's any left. But they don't
Correct.
have the ability to then reprint more money to compensate for the bad loan. That's the difference.
Well, neither was a bank, except for the
Yes, it
fact that
Of
it's
does.
the
course they
government.
do.
Well,
Of course they do.
no. So look, the difference here is we're talking about a regulatory structure that incentivizes these private companies called banks to be able to provide guarantees to depositors as opposed to shareholders who, so that there aren't runs against the bank, that the stock doesn't get crushed, etc. That's where your issues are. By the way, I
Now
have
No,
to
no,
speak.
you
Dave,
you
Dave.
brought out the howitzer. The howitzer came from the ability to basically print more money to cover the losses. If I'm in a private
Right, but the
transaction,
banks weren't printing it. Look, I have a
the
huge
central
problem
bank
with the
was. But
existence of the Federal Reserve. Okay, so because they're a private company, so I'm very sympathetic to the line of theory you're going. It's just, I think and I think that the Werner, what Professor Werner was saying was very interesting, and I think he's right. I think access to credit for fundamental business development is really important in the growth of an economy. And you don't want to break that. But what you don't want to do is enable a cartel to be able to do the stuff that you're talking about, printing money out of thin air, etc. So
that's
it needs
exactly
to
what
all
happened
be
in
done
'08.
in a much better way.
That's exactly what happened in '08.
Well, oh wait,
Well,
oh wait was so much worse than that. I was at Citi at the time, and my favorite analogy about Citi, and I don't know if I ever told you the monkey with a gun story. But the city's nickname in the securitization markets was the monkey with a gun. Why? Because they had no ability to price, or at least they didn't should display any particular ability to price the paper that they were buying or the deals that they were securitizing. So what they would do is say, well, we have a bigger balance sheet, and our bosses told us we've got to get bigger. And so they used their huge balance sheet, and they just 1 basis point on top of everybody of where the market was. And of course, markets being what they were, people figured out what they were doing, and they pushed the prices to stupid levels so the city would eat it. And there you go. If it wasn't for the TARP and whatever, I mean, Citibank was fundamentally bankrupt for a couple of years there. So yeah, I understand all that. I'm not supporting that in any way, shape, or form. What I'm
but it
saying
hasn't
is
ended.
there's a
It
way to
wasn't.
do it in a way without a federal government backstop or imprimatur, which causes the moral hazard of excessive and ridiculous malinvestment. That's all I'm
So,
saying.
Dave, one point you made was that this private company that you're referring to is using their equity capital, okay? Which means that it's not a fractional reserve, it's fully reserved, this
Well,
loan they're making.
Well, it could be, but maybe what they do is they know that people aren't going to pull money from them, so they loan out a lot more than they have in their
Well, then,
capital
then,
base.
then I have a huge, then they're printing money. Then they're creating US dollars out of thin air.
I mean,
Right, look, you can kind
I
of dress it
understand
up.
when
Yeah,
Caitlin Long and I
look,
have had this conversation, she starts calling me a Rothbardian.
yeah, you
If
are,
you if
that's a fair point. I agree with
and I
Caitlin.
embrace that. I think that there is reason for reason and intelligent reasons and ways to handle leverage, and we have not done that very well as a society. But it's not just in money; it's in other things too. I mean, it's like what's an Uber? Uber is a fractional reserve on a car. It's just that you have to wait in line and there's rules around it. You could do the same thing with money. The point is that it's not inherently evil, but what we've done is we've allowed complete malalignment of incentives. Bank executives in this country don't have to pay. You could get a $1 million bonus every year for 10 years, and then in year 11, blow up the bank entirely, lose $30 million or $40 million to the bank, and you're not on the hook to pay anything back. Well, in other countries, if you're a bank executive and you blow up the bank, you're personally liable. at least for a part of what you've made. We don't do that. So when you do that, you give that kind of optionality to people. They make horrible decisions. They take more and more risk over time, and there's nothing. The only one who loses ultimately is society, because these guys walk off. I mean, in crypto we saw this. I mean, how much money did Steve Ehrlich take out of Voyager before all of his creditors, all of the customers got crushed? The answer is a lot, and I don't think
Yeah,
anybody
but
on this
these are
channel is going to think that's a good thing. So
these
it's
are
not
kind of
just fractional reserve
strawman.
banking.
These central banks are aligned globally. So when
I'm not.
you can
You
fund
will
both
never.
sides of
Do
war.
not. But before I let other people talk, I just want to make this really simple. I do not think that the central banking system that has grown up is a good system. I am very strongly in favor of a major audit of the Fed. I think that they have 20 some odd thousand people. Maybe they should have 200 or 300 people to do what they should be doing. They shouldn't be a private company which is owned by the biggest banks in the world being the regulators of other banks. I mean, I think there's so much corruption in the system, it's ridiculous.
Well,
So
what it has turned into is exactly what our founders warned us of over
exactly.
time.
Oh, 100%. I haven't read all the Federalist
Yeah,
Papers, but I read a
like
few of them.
in theory, communism's awesome. In practice, you get hundreds of millions murdered. It just, and we're here now. So like, could it work? I don't know if men were angels,
Yeah.
but they're not.
So I'm not suggesting that it should. What I'm suggesting is an open economic system that if a company wants to loan money or create interest, that's fine. That if the government wants to provide something to protect people, I guess that's okay. But what it's morphed into today is ridiculous in multiple ways, causing lots and lots of problems. I mean, at the fundamental side of it, I mean, I agree with both Puncher and Dark in terms of the direction it needs to go directionally. I just think that we shouldn't overcorrect. That's all. I mean, I've talked enough.
Well, sometimes tinkering around the edges of I mean, I do think it's evil, actually. I mean, when you can fund the Axis and the Allies in what's essentially a reset of monetary systems and profit from war, I don't know, I don't know if evil is even strong enough a word. And that's exactly what happens when central banks can control essentially the creation of money. Um, so I think what we're going to talk about is potentially not tinkering around the edges of a broken system, which even if you quote unquote fixed it a little bit, it would revert to what it's ultimately going to be again, which is what it is now over time, because the incentives are there for it to do so.
Well, we've gotten caught sidetracked quite a bit. Congratulations, Dave. Took us kind of off the rails, but let's kind of put it back on the rails. I saw Thomas, you had your hand up. Oh, Thomas is gone. Let me bring Tomer up. Hold on. All right, so we're, I'm not sure where we were, but let's kind of try to get the train back on the tracks. So, in a world in which we have these stable coins, and at the same time we have fractional reserve banks, my theory of just common sense says people will pull their money out of fractional reserve banks and put their money into stable coins. Now, once you have your money in stable coins, you need a place to put that money. And I think what will spring up, and this goes back to Werner's point, is a whole bunch of community banks that are traditional savings and loans. They're not fractionally reserved; they're fully reserved. They borrow money. They take in deposits of your stable coins. They pay you an interest rate, and then in turn they make loans in stable coins at a higher interest rate, and they have a profit, but they do not leverage themselves. It's one to one. Thomas, I see you're back up.
Yeah, so I mean, part of what I'm trying to do is build a framework so I can really understand this, because I would say, frankly, I have a hard time following all of the details. But as I think of it, when I think of what I heard from Werner, is you have a classical uh, Fed central banking paradigm, and that's a dominant model in the world today. Lots of people want to go do that. Then you have the other end of the spectrum, the Thomas Jefferson, Andrew Jackson, Ron Paul, and the Fed, and move to a national banking system that is not controlled by a central bank. What I heard from Werner and what I could ascertain by reading some of the stuff and trying to classify where he sits, he kind of sits in the middle. And his main issue was he wanted a central bank, a bank that would backstop the banks, but he didn't want a centralization policy where, like, if you look at the way the Fed actually works, is they're rolling up all these small banks. And Werner's thesis is small banks loan to the community and drives GDP. So what would be helpful? I don't think we're going to be able to do it on this call, but I think it would be helpful for people to understand, how does credit get created in a central banking system? How does it get created in a system that doesn't have central banks, like, I'll call it 1880s banking? And then what is this in between that Werner talks about? And is the in between the ideal position? Now, I think that the system that we're in, that has overly centralization is, I'm no fan of the Fed. I don't think it's a good thing. I think it handicaps our society. I think, but I don't know. I honestly, to say, I just don't know enough to say what's the path to go from the current Fed structure, recognizing all of its political power and frailties, to something that is more ideal. When you listen to Ron Paul, you say end the Fed. Yeah, I agree with the idea, but is it even politically practical, given the powerful banking interests? Because these banking interests are not without power. They could be the most powerful lobby in the system. So, but for me as listener, I'm trying to listen to this. I'm trying to get a sense of what's the difference. Is it fractional reserve accounting? Is it sound money? All of the above? And I'm just frankly, I'm just saying, maybe I'm the only one. I'm getting a little bit lost.
All right, so let's kind of back up again and just go through the mechanics here. The US government should be, in my personal opinion, the only entity that can print or create money. But that's not the system we have today. As we've discussed, banks can print money out of thin air. Fred suggests that there's some limitations on that. I'm not sure that's true, because,
But that's a Jeffersonian view of banking. Is that fair?
yeah, absolutely.
Okay.
Well, it's a common sense
Yeah,
view
yeah. No,
on
I get
it's
it.
a forget about banking for a second. We as Americans, right, or whatever country you're from, you should pretty much come to the conclusion that the best scenario for you is that the citizenry, through elections, through democracy, could control how much money is printed. But that's not the system that's been created, right? This is where I differ from Werner, right? I don't think there's an absolute use case for a central bank at all. And I think Max, I see Max just popped up. Max will certainly agree that the central banks have become the root of all evil. But it's not just the central banks, it's their member banks, right? It's the entire malaligned system that allows these larger banks to print money, basically unlimited, and then that money goes after, asset prices and consumer lending to create inflation, right? Which then boosts the value of their collateral, right? So what we're suggesting is that there's a better way to do this. That doesn't mean it's going to happen, but I certainly think that the Dr. Pippa comes up with an absolute better way of doing this. And if you think about this whole creation of stable coins and what the whole point is, right? If they are, and they are fully reserved, then that creates a parallel system. You have, in one hand, you have Federal Reserve backed fractional reserve banking, and in the other hand, you have stable coins that are fully reserved. And in a stablecoin system that's fully reserved, you could then see a world in which the person that's backing the stablecoins, that's you and me, the citizenry, through the Treasury, could completely bypass the Federal Reserve and bypass the Federal Reserve by issuing treasuries directly to the stablecoin companies, thus dictating the rate at which they borrow money from or they print money through debt from the current 4.5% or whatever the market bears to whatever they say it is. And
Yeah,
that's go ahead,
mhm.
Max.
Yeah, it's like I think of these like stable coins as basically a hospice for the US dollar. It's where the US dollar goes to die. It's just extending the life of a useless regime of US dollars. But what I'm pushing for in El Salvador is what I call a decentralized state to go along with decentralized banks, to go along with decentralized Bitcoin. So it's something called Node Nation. So every household has a Bitcoin node, and essentially the citizens have all the money, the state has no money. And the citizens decide in a way through some governance mechanism. I mean, this is all theoretical at this point, but it's what I push for there. And if they want a new airport, then the agenda is put forward. The nodes who own the state's money, the nation's money, the wealth of nations is owned by the citizens, essentially on their nodes. And the proposal for the airport is circulated, and then the citizens either put up they have the ability to lend against their Bitcoin, so there's a credit mechanism there. And so it's just a decentralization of the state. I don't think the state, as we currently understand it, survives Bitcoin. Just like I don't think the central bank, as we understand it, survives Bitcoin. So we're heading into this totally decentralized future. So that's what I push for in El Salvador. I talked to the president about that, and at the like a lot of my ideas, it's still kind of on the margins. But we do have Node Nation in El Salvador, and the objective is to put a node into every household in El Salvador. And there's a program called Node Nation, and it's up and running. We also have these multiple circular economies running there, which are seceding from the state in a lot of ways. So I think that's where I see the central bank going. I see it being euthanized.
Yeah, as do we, Max. So hear us out on this thesis. And by the way, I agree with you. This ends with Bitcoin, right? Like Bitcoin wins the war. But how do we get there? And what we're presenting is this concept that we go back to an Andrew Jackson vision of fully reserved banks backed by stablecoins, community banks that care about the people, that care about their local community, that make loans that are beneficial to the community. And that goes to Werner's thesis. So, Marilyn, this might be a good time for you to hop in.
Dark,
Yep. Go ahead.
Dark. This is
Can you hear
Rusty.
me?
Can you hear me?
Yeah, let's go to Rusty. Let's go to Marilyn first, and then we'll come back.
Dark, what I was going to recommend is that you continue the thesis all the way through without us taking any questions. Like, I don't think you've completely outlined what you went through over the weekend that was so inspiring. And we've had questions here, there, and we've gone back and forth for clarification purposes. But if you could just lay it out for everybody, I think that's going to be very valuable. I mean, all the way to the point where Bitcoin basically is the relief valve.
Okay. I think that's a good idea. So, not trying to be rude, but I'm just going to kind of go through this, and then at the end, we'll kind of start bashing it and poking holes. All right. So, the government's going to issue stable coins. The stable coin companies, which are essentially technology companies, are going to go ahead and issue those stable coins. The government will be able to dictate the interest rate that they give to the stablecoin companies. And this ends up being an end run around the Federal Reserve and the fractional reserve banking system, because the government gets out of the business of issuing debt the way we think of it today, and they get into the business of printing the people's money. And then that people's money is then used by community banks to make proper loans that help the community. And those banks are fully reserved. They are essentially savings and loans. A $1 comes in, they can loan a dollar. They can't loan a dollar they don't have, right? And you go to a fully reserved banking system. Now, at the same time, what's left over is these fractional reserve banks which for all intents and purposes are zombie banks sitting on a gazillion dollars worth of non-performing loans, and they are taken into the town square and executed. The non-performing loans get rolled off into they go to heaven, and the performing loans would get purchased up by these community banks uh, in a fully reserved uh, uh, basis. Okay, so now you have the government that is able to borrow money at, let's say, 0.5% through the stablecoin companies. You then have these community banks that are able to make fully reserved loans that benefit their local communities. And what happens to all of the additional money that the government prints? In other words, rather than that money getting soaked up into asset loans, Bitcoin serves as the exhaust valve where it's able to take the inflation, and Bitcoin essentially eats the inflation for the US government. It is the exhaust valve. All of the additional money that's in the economy goes into Bitcoin, becoming the ultimate savings vehicle. Maryland, does that summarize the thesis?
Yeah, I think that hits on the major topics and points that were laid out this weekend.
Okay, so what we're really proposing, or what's been proposed by Pippa, Dr. Pippa, is a new system. And it's a brand new system that replaces fractional reserve banks, eliminates sort of the money center banks as we know them, and goes back to more of a constitutional republic where the people have some control over the money supply, and Bitcoin serves as the relief valve for all of the inflation that's created. Now, I do believe that this is a temporary, although long-term temporary fix to modern banking, because eventually Bitcoin will eat this system as well as it becomes corrupted. But for now, is this the goal of the Trump administration? Is this where they're headed with the Genius Act? Right? Is this where we're going with stablecoins, or is it simply a means to um, continue to perpetuate the bad system? Well, we don't know, but this has been put out there. It's a very interesting thesis. We know Trump and that administration sort of hates the Fed. This would be the way to replace the Fed and kill it dead in its tracks. Um, Curious to hear any feedback. I know, Rusty, you had your hand up. Go ahead, brother.
I think we lost
It's
Rusty.
dark.
Okay, Chodo, go ahead.
Hey, Dark, thanks for inviting me up, and I've had my hand up for a couple things here. First, I just want to speak to people on this call who might be new. This space every weekday at 11:30 Eastern Time or 8:30 Pacific Time is the best source of alpha you can ever encounter. Please, please take the time to listen on a weekly basis at first, and then share this with your friends and family. The people on this call on stage, excluding myself, are legends, and you don't know it yet. I want to start with Max. He's arguably the greatest investor of all time. Not Warren Buffett, maybe not even Michael Saylor, because he's the first to see this. And his point about Node Nation is fascinating. As I sit here and listen to my node spin up and spin down, I encourage everybody on this call, please look into running your own node and seeing what this thing really is. Again, to the plebs, this is money 3.0. We had gold, we have fiat that's going to get taken out, and then we have Bitcoin. This is your future generation. This is your chance to be part of a better system, a fair system. So thanks to everybody on stage. The second is, in regard to all of this, I happen to come back to the alignment of incentives of Bitcoin, and I look at this new stablecoin to get on point with this. Today is the future of banking. Yeah, this is really interesting, but it's a bridge. Whereas what Max is talking about with Node Nation is the penultimate step, probably or hopefully. Um, So I'm looking at this as a bridge, and I'm saying, a couple things. One, I don't think the federal government really should have the ability to print currency. Now, our current president, from a control perspective, this, it's a very interesting route, and I think it actually adds credence to this thesis that Dr. Pippa first came up with, I guess. And thanks to BitPetro for introducing it to us in this weekend's activity. But the next thing is, I just wanted to throw this out here for the people that are starting with this conversation to please stay with these people for a period of time, because this is such an all-encompassing topic that, like, the rabbit hole, if you're just looking at it, this is the best way to come in, and to come in an organized manner. Because if you don't come in organized and with conviction, you're not going to stay the journey. So I don't want to turn it back over, but I just want to get those comments out there, hoping to reach some new people for the first time.
Thank you so much, Chad. Such kind words. I really appreciate it. Rusty, go ahead, bud.
Hey, can you hear me?
Yes, we
Yes.
can.
Okay. Dark, I love the breakdown in, Max, what you're saying with the nodes. It sounds a little bit like, in theoretically like a credit union, right? Where the people who put their money in, are the ones lending it out. My biggest issue with the central banks, and I think this is everyone's, is the fact that they control the interest rate, and it's not a free market, right? When you allow free markets to function, they're always better than when someone's intervening. With stable coins already being set up, whether you like the policies or not put in place, they are a one-to-one reserve straight out the gate. So I do think the framework's there, but using a system kind of similar, like you're saying, a community bank, and I agree with you, and having kind of an authority to sit there and govern, all right now, current situation, the Office of the Thrift, which is just like the FDIC, everything else, is the one that controls all credit unions. So thinking of a system like that where you're lending out based on that theory, and I like Max's idea of having nodes and you come up with project-based ideas for larger situations where you're using, the assets of the people and having Bitcoin as the ultimate fallback, and then stable coins as a front forward as cash. I mean, I think all this is there. I love this theory and putting it down, but I was thinking in my head, I was like, this is starting to sound more and more like a credit union in a way, as opposed to a community bank. Didn't know what y'all thought about that.
Yeah, I think you're spot on. Credit union, savings and loan, whatever you want to call it. These are fully reserved banking outfits that will use their stablecoin deposits to go ahead and make loans, right? And the only participant in the system that gets to print money is the U.S. government. Now, to Max's point, in that case, the U.S. government will print too much money, as it always will, right? Because it will be enabled to do so, and all of that money will end up in Bitcoin, and Bitcoin acts as the ultimate arbiter, right? People will store their money in Bitcoin when it outperforms anything that the banks are offering. So it's a system of checks and balances that works, or could work, if instituted properly. Look, we come up here to try to present you guys and the audience with, different ideas, different things that are being thought up by some of the smarter people, in the space. um, is this going to work out? We're not presenting this as this is the solution to the problem, right? What we're doing is presenting this is what smart people are saying. It's interesting. It's worth thinking about. And we're entering this new world where they've created this fully reserved stable coin. In that world, I struggle to understand why the Federal Reserve needs to exist. Now, maybe I'm wrong in this fact, in this view, but that's okay. I've been wrong before, and I'll be wrong again. But I do think it's worth discussing and exploring what this new world's going to look like, because clearly somebody has a new world a new financial model out there. If not, there'd be no need for stablecoins. Stablecoins directly compete with the existing system.
But Doc, what it sounds like you're saying is your design there, it obviates the need for a Federal Reserve, but it doesn't get rid of the problem. So what it does is it makes the ability to abuse the system more efficient. So I can more efficiently abuse the system with stable coins than I can with the cumbersome Federal Reserve model,
Well,
right? Because it doesn't take away the fact that you've got the ability to print money by the state, which has always been a problem. And it's not like the regulations don't exist. There are plenty of regulations to keep actors in check, and there's plenty of checks and balances. The problem is there's no enforcement of the regulations, like infinite rehypothecation. That's illegal, but there's no enforcement. Naked short selling, that's illegal, but there's no enforcement. So by giving the state the ability, and you have the Cantillon effect, right? Those who get the printed money first are still going to be the worst actors. It's a distinction without a difference, as far as I can see. I might be missing something here, but and when you say the banks are fully reserved, they're fully reserved by what? By treasury bills? The stable coins that buy treasury bills? Well, there's nothing to stop infinite creation of treasury bills to the point that was made earlier. If JP Morgan goes bust and the stable coin is the first creditor in line, well, JP Morgan won't have the money to pay the creditor, but they'll have to go to the bank for a bailout and they'll go print more of these stable coins. The infinite creation of money is still the problem. Like, how does it get around that? I don't,
It
how does it
doesn't,
get around that?
Max. It doesn't. What we're suggesting is that this would be the interim system before hyper Bitcoinization, because Bitcoin will serve in it, to your point, right? With infinite money creation, that money will find its way into Bitcoin. Like that.
I'll
That's
give you a solution right now that would solve 90% of all banking problems. You know that the, the interest rate matrix that is present, which is the various loan rates that are on the books of the regulators, there's one specific rate that they have control over specifically, and that's the margin rate. If they don't have to raise, if they just raise the margin rate, they would squeeze out most of the speculative excess out there. To just raise the margin rate by 300 basis points, and you'd have a remarkably beneficial impact on squeezing out all of the bad investments. In my view, they could simply do that. That would be something they could do over the weekend. They can simply literally turn a knob, raise the margin rate without upsetting the overall, yield curve and rate index, which applies at different aspects. You know what I'm saying? Like, it's not there. There's a curve there. There should be a relationship, but you can single out that single rate and raise it.
you can, and they have in the past. It doesn't end well, right? The entire system is sort of built on a house of cards.
None of this ends well. My point is that there's no easy transition. You're not going to, like I said, it's just a hospice. You go there to die. It's dying, so it's palliative care for a dying system, is what you're describing, which is very humane. But why not just pull the plug and let's move on to the next thing?
well, because the people who control the system aren't going to do that, first of all. And secondarily, Max, I guess we always talk about how do we get from this system to the next system without the kind of chaos and societal collapse that would inevitably come if we just go from one to the next. And this is like you said, it's palliative care for a time. But in that transition, more and more people are going to come to know that the safety valve, which is Bitcoin, is where you want to put your savings. So you get more people in the lifeboat, I guess.
Trump wants to give every kid $1,000 savings account that's going to be invested in stocks. Well, put it in Bitcoin. That would be a good way to get your Bitcoin strategic reserve started. Number two, start buying Bitcoin. What's the dilly dallying about? What's this? Why are we focusing on stablecoins at the federal level when they should be focused on Bitcoin? Stablecoins is a mirage. It's a chimera. It doesn't exist. It's bullshit. You should be just buying Bitcoin, and that should be the focus, number one focus, because the risk is, like China, Russia, Iran, or these other countries figure this out first, and then the U.S. is sucking hind tit, right? They're going to be buying Bitcoin at $1 million a coin. They need to get up. They need to get going here. They need to get in action.
Yeah, but so now you get into the, you know, kind of the inertia in the system, right? I agree with you. However, that would require an act of Congress, which is not going to happen. So they've come up with this neutral, budget neutral, term that wouldn't require ostensibly an act of Congress. But then where does that money come from? So look, these are politicians, and we're trying to think about what they're thinking about, not necessarily what the best system is. Of course, we agree with you, but we don't. I'm not the president of the United States.
Yeah, and that's sort
Hey,
of the point, right?
Dark,
Is that how do we get?
let
Yeah,
me
go ahead.
let me
Go
frame
ahead.
it like this: is the way I'm looking at the whole transition process that you're describing here is the ultimate form of yield curve control by effectively bypassing the Fed, right? But I don't think we can look at it from an isolated perspective. To Max's point, and the ideas that we've pontificated for the last couple months, you have to add in, because it's the release valve if they ultimately went in this direction, right? Which makes sense. I don't know politically if it's possible, and there's a lot of entrenched interest, right? But if they did go that way and strong armed it through, it doesn't, you can't look at it just as this in the silo. You have to also take a look at it from the implications of having a Bitcoin reserve, and then potentially even ideas like bit bonds that we've discussed, right? And that ability to add to the Bitcoin reserve, and what impact that could have by activating the sovereign balance sheet, right, as a whole. And I do agree, ultimately, to Max's point, Fayette collapses. But I think you can't look at it from an isolated perspective, and we're trying to envision what a transition could look like.
Macro Matt.
What
Thank
up?
you, Maryland. I agree, by the way. But go ahead, Matt.
How y'all doing?
Good. How's it going today?
Doing well. Just had a quick question for y'all related to this that I've been kind of grappling with, which is if you look at in the past, anytime a hard money society went to war with a fractional reserve fiat society, the unfortunate reality is because the fiat fractional reserve society is able to confiscate more of the society's wealth for the purpose of war fighting, they tend to end up winning wars. And one of the best examples of this is Napoleon versus the British, right? Where you had Napoleon with the Banque de France, which was a largely hard money system, versus the Bank of England, which sole purpose initially was created basically to be able to fund the British war machine. So I guess the question that I have here for you guys is, I'd say I'm obviously ideologically aligned. I want Bitcoin to win. I want it to succeed. I want for society to move in that direction. But I haven't heard a good answer from anybody in the Bitcoin community, which is why I just want to float this, which is what happens when that hard money, relatively decentralized, node based society inevitably ends up being a neighbor with a nation that is still playing the confiscation of wealth fiat economy games for the purposes of being an aggressor against their neighbors. It just seems to me like it's a quite a challenging situation that's almost inevitably going to arise. And I guess maybe the only response that I can think of is in the US based system initially, which I would say Bitcoin is a iteration of. You had like the Japanese Admiral Hirohito. He said, you can't invade America because every house has a gun in it, right? So you kind of have to have that sort of a society, I guess. But anyways, I just wanted to float the
But Matt,
question for you guys and see
Matt,
what your
this
thoughts were.
this is where we get to Jason Lowery's thesis, right? Future combat. We've reached the limits of kinetic warfare, at least as it relates to many, many countries: the United States, Israel, Russia, China, and many others. Right? They have nuclear weapons. I mean, look at Ukraine. I mean, Vladimir Putin has been very restrained. I'm no apologist for Putin, because he realized he could be in Kyiv tonight. There's no doubt in my mind. But he's not, because that would set off a chain of events that could lead to nuclear conflagration. The idea that Ukraine can, quote unquote, defeat Russia is absurd. They have nuclear weapons. So the warfare has to morph now into other type of asymmetric warfare, or else the entire planet is destroyed. So while your thesis may have been true 100 years ago, and in the Napoleonic age, we've reached, like I said, we've reached the limits of kinetic warfare. You can't go any further.
People also said prior to Ukraine that you would never see trench warfare or tank warfare again, and yet here we are, 3-4 years later, still having
Yeah, but
a trench warfare kind of traditional World War II style fight there. And to your point, sure, there's always the looming sword of Damocles that is nuclear weapons, but everything so far has been a fairly traditional kinetic conflict, right?
But the
because
key
of that
word,
reason.
the key word that you spoke was confiscatable, and that the neighbor seeks to confiscate. With Bitcoin, you have the first property that's unconfiscatable, and that is a dividing line in the history of property, and that's where the game theory kicks in as well. So if you have, when it's properly secured, unconfiscatable property, then violence is no longer a good negotiating or strategy for accumulating property. That's a huge difference in the world that we're getting into with Bitcoin as the key property owned in that way. So that's where it has to have the focus on that. That's the first time we've ever had unconfiscatable property that's available for free. That's you can store for free, and that changes. It gets into a philosophical discussion where you swap out hate and violence and you replace that with benevolence and altruism. There are other ways to negotiate through life than violence. Violence is possibly being demonetized by Bitcoin, which I that's where I come in. That's what I believe.
Yeah, it is. And Matt, just to go back to you saying, they reverted back to trench warfare. Yeah, they did, but they also have drones that can come in and scan your eyeballs and put a bullet in your head, right? So the technology inside of what I'll call traditional warfare continues to press on. But there's one reason why Putin doesn't take over Ukraine, and that is because NATO has nuclear weapons, and that's it. And I think he's looking to put an end to this thing with just the bloodshed that's happening it's almost like a proxy war that is by necessity reverting back to old types of warfare, because to move forward on that kinetic scale is not possible.
Yeah, I completely agree with that, and I completely agree with your statements, Max. And just to be clear, I was talking about a nation that is choosing to confiscate its own citizens' wealth through its own fiat system. I mean, I would like to think that over time, those just become weaker and weaker to the point where they're no longer viable. But at least right now, we're still in the majorly centralized powers era where people are running fiat systems that are still pretty powerful. So I guess it's just the main concern that I have is navigating that transition period, which is what this whole discussion has been about. So my hope is that whether it's through some sort of intermediate stable based system that then ends up kind of being the final nail in the coffin for the fiat system, we can then transition to a Bitcoin based one. But it's there's no doubt in my mind that there's going to be a lot of volatility and turmoil in the meantime. And I just know if you're able to confiscate a large portion of your nation's wealth for the purpose of war fighting, you can sustain conflict for a really long time. And that's the main concern, I guess, that I'm trying to highlight here.
Let's go to I'm sorry, Dave.
So I want to bring it back to stablecoins and to what we started with, because when I listen to Max, it's like half of what he says I nod vociferously and agree, and half I just don't understand. Because you can have multiple thoughts in your head at the same time. So, the notion that stablecoins are a hospice for the dollar, I mean, that sounds, well, whatever. It's bullshit, right? The dollar deserves to be in hospice. That I do not disagree with. We're on the same page there. I think that all fiat currencies ultimately have serious issues. For the fact is, you can't give unlimited power to individuals and expect them not to use it, and so that's why we have what we have in Congress today. It's we could go down that rabbit hole. We'll all be in violent agreement. But what stablecoins represent are a dramatic improvement in process in the system for moving value. So whether it's the dollar is your standard of unit of currency, or Bitcoin, or whatever, the fact is you have a standardized way for a nation state currency to be moved from point A to point B at fractions of the cost, at orders of magnitude more speed. Now, you could argue that that will help the system and sustain the system for longer. And perhaps by making the US dollar globally spendable far, far easier, it will help the dollar vis-a-vis the other pieces of crap fiat currency around the world. Because if it's the best of a bad bunch. But that's immaterial. What is material is it opens up the door for tokenization of all assets, for on-chain transfer of assets, for the ability for individuals to actually do peer-to-peer, transactions of assets. And now I understand the notion that we want that to be Bitcoin, and I kind of get that. And you could talk about how, and Eden Yago and other people and the Lightning people are all coming up with ways to be able to use Bitcoin that way. But Bitcoin's inherent design natively doesn't support that. But expecting people to unemploy themselves, expecting people to take apart a system that they benefit from, is just not going to happen. And so, a system where Bitcoin eventually gets to a price point, a market cap that everybody starts measuring the dollar against, is a very real way to take power away from people. And it's far enough in the future that we can lay the groundwork for that to happen now, and at that point in the future, then we can get to a Bitcoin standard. To me, that is a far more both bloodless as well as likely way for Bitcoin to achieve some of the goals that Max often talks about. Color me skeptical when it comes to peace and love. I don't want to go there, but he and I violently disagree with one another uh,
Well,
on where we go. But
yeah.
it's just. But we agree that being able to finance debt to drop bombs, and more importantly, we agree that prioritizing corporate welfare at the governmental level of where the corporations in that we're talking about are the ones who are manufacturing said bombs is a really bad thing. So we agree on all of that. But I do think that there are ways to help move the system along. And stablecoins, compared to the current banking system, which relies on paper and is controlled by a cartel, and that cartel disproportionately rewards the owners of that cartel, is still a good thing. And so we could disagree on the rest, but I mean, that's very, very clear, because the current system is
Yeah.
really bad.
Yes, sure, sure. This what you're saying there. It adds up to a well thought out and logical idea. The bad actors that are there now will continue to be bad actors, and they'll continue to do bad things. But here's a interesting thought exercise, which is put out by Safedina Moose when he was at the Bitcoin conference recently, which is kind of interesting. I'm not sure I even understand all the fine points of it, but I'll mention it here as I understand it, because I think it's interesting. So he talks about Tether, and he's saying, Tether, with all the interest that they aggregate on their Chi bill position, which is roughly 160 billion, they're buying Bitcoin. And at some point, he envisions a time when the Bitcoin position on that 160 billion on their balance sheet in aggregate tips over, and it's the greater part of their balance sheet. And then the tether would be essentially backed by Bitcoin. It would no longer be backed by the dollar. And so then Bitcoin becomes global, used in this way. And that would be like a soft extinction event, right? Because they're just gradually swapping out dollar for
Well, but
Bitcoin.
what
And
he's
then,
saying, Max, is retained earnings. He's saying, and the appreciation of Bitcoin plus the retained earnings consistently doing it is moving in that direction. That is an awesome, example of exactly what I'm talking about. But I totally agree with that. And
uh
it would be good if that happened. Look, There was an old thing, and you were on Wall Street at the time, so you probably remember when Greenspan was running the Fed, and he started his career as a gold bug. And someone asked him, "At what point do you care about the price of gold?" And in an actual moment of candor, because when you're running the Fed, you tend not to be particularly honest as a general rule. He said, "Well, to price significantly higher, at you start getting to a few multiples of where it is today, it becomes troublesome for me because it indicates that we're doing something wrong." And people don't talk about that comment, but it's very relevant. And so it's been asked to every Fed chair since then. And the real question is going to be, it's not going to be gold, it's going to be Bitcoin. And it's going to be when it gets to an inexorable part in its growth that they can't actually do anything about it. But that's the key. The key is when there is a measuring stick that people can really see what the fuck they're doing, that's when it's a problem for them. And that's when it's good for everybody else. Anyway,
Well, the follow up would be, so let's say that the current system we both agree is unsustainable. Let's say it hits a tipping point and you have, a 2008 style global credit freeze, which was mammoth, which was required trillions to restart the engines, except it's on a much greater magnitude. And there is an inability to restart, and you have a genuine global financial crisis that's much bigger. So, would it be prudent to talk to people about those risks? Because one of the things when I hear people talk about an easing from one system to the other, it kind of glosses over the fact that systemically the system is on the precipice of a potentially. I don't want to sound alarmist, but it just seems like it's on the edge of another GFC from the 2008 era, which would cause catastrophic results anyway. So, should there be it's great to be a transition that's more less radical, but shouldn't there be a discussion? It seems like what I find interesting about the Trump administration is that they don't really seem to want to recognize the risks that we're talking about here, which I think is an omission on their
well,
part.
well,
It's just,
can I respond to that for a second? Because I think that, look, you're right about the risk. There's no argument here. Clearly every crisis that happens is going to be progressively worse and worse because we're in because of the debt spiral. I mean, whether it's Larry Lepard's Big Print or James Lavish, I mean, all these guys. I do too. I do it just did a show with James this morning. There's a lot of risk, systemic risk in the system. So let's just stipulate to we agree about that. Let's also understand, however, if you're a smart dude like Scott Bessent is, and he is a smart guy, you know that there's a few things you're never going to do. Like you asked the question, why are they not buying Bitcoin? Well, they'll do what they can within the limits of Congress. But the one thing I know for sure they're not going to do is let anybody know what the hell they're doing until after they've done it. And so we're not going to know, what they're capable of, because if they did, then the price would rocket up, and they'd be paying $200,000 or $300,000 for a Bitcoin as opposed to 115 to 120. So we don't know what they're actually doing. But understand that they're trying to figure this shit out because they agree with you in a core. They certainly agree with you about it's going to at least get to the monetary value of gold. So that's important. The other thing is, which is true. Now the other thing is, if you're right, and I think you are, about the systemic risk, and they understand systemic risk, then they want to do things to diffuse that as best they possibly can. And one of the things that you wouldn't do to diffuse it is to tell people that it's a risk. And so it's all very interesting game theory here. But if you assume that this administration actually agrees generally with what you're saying, a lot of what they're doing makes a lot more sense. Which I know sounds counterintuitive, but it feels to me, as someone who spent most of my life trading or building quant trading systems, I kind of understand the notion to keep things close to the vest.
For sure. Max, do you want to respond to that? If not, we'll go Eric, then Rusty, then Feather.
Yeah, I would just say, it's a slippery slope because it's, you end up procrastinating, and this is the problem that get us here to begin with, is that, well, we'll just print another trillion and we'll get some growth and we'll pay it down. It just, you kick the can down the road. That's the Greenspan motto, right? Was the Greenspan put. We should have been doing this for the last 30 years, but Greenspan said, no, extend and pretend. And then Bernanke did the same thing, and Yellen did the same thing. And the current guy does the same thing, extend and pretend. At some point, there's got to be an adult in the room that takes away the punch bowl. I grew up when I was on Wall Street was the last day of Paul Volcker, right? That Paul. Imagine Paul Volcker during all this. He wouldn't have allowed this to happen.
True that. Eric.
Yeah, first of all, this is a great discussion. Very good discourse. Calm people expressing different points of views. I agree with Max that this is just another extension. Like stable coins, we can say they're fully backed, but they're fully backed by U.S. debt, which is backed by armies. So I don't think there's any debate on that with anyone here. But I think if I'm summarizing this thesis correct, which is for the audience just a thesis of what could be coming, is that the Federal Reserve, which is a central bank, which is a core tenet of communism, which is designed to be completely opaque and not transparent, that is the core of what it is. That what stablecoins are doing is shifting into a parallel universe for a period before a winner is decided. So think of the Federal Reserve almost as the heroin source of debt and fiat transactions all over the world. Stable coins in this thesis would be the methadone, and then in the end, Bitcoin would be kind of the recovery and sobriety. Is that a good way to summarize what you're saying here, Dark?
I think it is. I think you have to find a way to transfer people onto Bitcoin, right? And ultimately, I think the thesis that was presented not by me but by Dr. Pippa uh, is really really strong, right? I just think it's logical. I think it'll work to Max's point? Of course not, because in the end, the government will go crazy. The system will bastardize itself. People will find loopholes and cheat, right? Like that's the whole concept, as Max brilliantly points out, is Bitcoin is unconfiscatable. It's truth, right? The ability to, it can't be counterfeited. It can't be, all of its core characteristics make it better money. So to that point, money, wealth or capital will find its way to the best money. But how do we get there? I do think that this is a really interesting concept of how we sort of dethrone the current banking cartel and put in place a system that lets us peacefully transfer to Bitcoin without, some kind of unbelievable catastrophe. That being said, you know, I don't know which camp I'm in. I don't know. I'd love to see this happen. Do I think it will? Probably not. Um, but yeah, that's the world we live in.
Well, to Dave's point, so if there's a managed way to, if I understand kind of his broad theme there, kind of a managed way to transition this, then maybe what we should be talking about is how do we inject Bitcoin into the system in all possible ways. So, I remember when I remember Bush one sent everybody a $600 check. And then, of course, well, that kind of dates me. There was the stimulus check during COVID, right? Everyone got a $1,500 check in fiat money. Um, send everybody some Bitcoin. Call up some wallet guy and say we're getting set it. Open up your Social Security /America/Bitcoin. Send everybody some Bitcoin to inject it right into the economy, to have that, because everyone knows that once you have even $5 of the Bitcoin, you start thinking about it, and that you get over the hump, right? So maybe that's the discussion. How do we inject Bitcoin into this thing in any subtle way possible?
That's where the political layer, you run into a lot of interference there that makes it not politically tenable, I guess. And at the end of the day, politicians trade in the currency of votes, not the currency of solutions. Hey, Dark, a real quick question that I got in a DM, and I had the same question. In this scenario where the United States government is effectively the printer of money, not the Fed, isn't there a throttle on that? In that it's throttled by the citizenry uh, buying it, or no? They just pump it out, and whatever the excess demand is gets pumped into Bitcoin.
Yeah, there's no throttle because the U.S. dollar is global. But what it does do, look, let's talk about the big positive, is that we know that the overwhelming majority of the money being printed is not being printed by the Fed. It's being printed by banks all over the world. And that stops. So if you have one central point of printing and it's done on a stable coin basis where at least we can tell from the stable coin blockchain what's being printed, then there is a level of transparency, right? A lot of the shenanigans leave the system. But yeah, to Max's point, ultimately they will find a way to, continue the bullshit. That's why, look, I don't, this is a fascinating subject because clearly something's going on with these stable coins other than just, a better form of a payment transfer. If that was the case, there's no way it would have passed Congress.
No, they
Something,
think that the stable coins are going to be the buyer of last resort of U.S. Treasuries as the world is de-dollarizing. That's what Trump loves about stable coins, is that he's got a new buyer for Treasuries. Okay, that's what he loves about it. That's the number one use case for him, right? And so they want to, because a big beautiful bill is another 5 trillion or so garbage heaped onto the debt pile, and there's going to be another 10 or 20. It's never ending, right? But that's how he sees. That's how he talks about stable coins, right?
Look, there's a high
correct.
likelihood that you're correct, Max, and if that is the sum total of their thinking, then there is no safe passage to the next system. It's going to get really bad. Um, and again, Max, you like me, you're a parallel thinker, right? We'll do we'll inject the system with Bitcoin, politics aside, and any one of those initiatives might not be as successful as another, but you change the system fundamentally, boom, all at once. That's a military idea, attack in parallel. But because we have politics involved here, they're forced to go serially, and serially is a lot less effective. I'm going to do A, then I'm going to do B, then I'm going to do C, D, E, F, G, and at the end of it, it'll be better. Well, the problem with
Okay, what
serial,
about the states, right? America, you have the states, so that's how you got the marijuana laws are different in different states. Different states have different laws, right? I mean, what's the most
no,
Bitcoinized state in America? Would be Texas, right? Why not? Why can't we just get Texas to be
well,
fully
because they're
Bitcoin?
at the end of the day, they're run by politicians as well. Look, I'm agreeing with you in that is one leg of a parallel attack that could be highly effective. But politicians think serially, and the problem with thinking serially is even though the likelihood of any individual outcome A through Z is 97%, the overall outcome of A through Z is 0%. It doesn't work. Serial thinking will get you killed. I learned that in the military. Parallel is the way you want to do it. You want to break something. It's called the hysteresis effect. Like, think of a pencil that you're about to snap. You apply force to it until it snaps, and it becomes two different things. It used to be a pencil. Now it's two broken. Now it's an eraser and a pencil. But what happens in systems is if you don't apply enough force by attacking parallel, you give just enough and it bends and it's about to break and then you let go, it's still a pencil. The system doesn't change. And that, unfortunately, is how politicians go about things. And it's not a very efficient way to do it. We'll go to, Rusty, Feather, then Chad.
Hey guys, I I was gonna inject this because and maybe this is for later discussion, but Max, I've heard you talk philosophically about the idea of with Bitcoin you get rid of hopefully war and things like that, right? Because I mean half the budget of the U.S. is really defense. But Punter, you know this as well. Energy is such a critical mechanism moving forward that how does that play into kind of your thesis or theory? Because we're gonna need a lot of energy. Just grok alone runs off of a ton of methane. A lot of people don't know that. So that tends to be what drives war. I know Matt brought it up, but I was thinking through that. Just curious your thoughts. Thanks, guys.
Well, a lot of the found energy that's not being used or stranded energy. How did Bhutan become the biggest Bitcoin per capita in the world? Is hydroelectric energy. There's gas flaring energy. It's actually green. Bitcoin is probably the greenest industry in the world. So there's that. And there's a lot of other dynamics to it. Obviously, in El Salvador, we explore geothermal energy. So it's energy exploration and development, et cetera, changes. I mean, it's very well understood. And look at the petrodollar. I mean, the petrodollar was the beginning of the hyper monetization or hyper financialization that became post Bretton Woods, post 1971, and the gold standard abandonment by Nixon, right? So you had the twin rise of banks and oil industry together, is what gave us the 1980s and 90s, and it gave us this huge debt bubble. Ultimately, was that energy is very cost um, intensive, and the banks would loan against it. So this gave us what we are currently in now. So if the energy picture changes pretty dramatically under Bitcoin as well, and also the fragmentation of these huge monolithic states like the U.S. that has 50% of the budget goes into the Pentagon. Well, if you start splitting up all these states into multiple sub-states or what have you, you break it all up, then it changes that picture as well. So it does. It's not. I'm not saying what you're saying is correct. It is energy intensive, but I think there's a lot of room for the some interesting changes in that industry as it relates to Bitcoin that I would say is commensurate with a move toward a step away from war as the primary defining feature of a state.
Just wanted to throw one thing out here related to this too, which is that the great thing about Bitcoin mining is that it allows you to monetize energy at the source without needing to ask for permission from anybody, right? So, like, if you just have a random gas well somewhere and you can't connect it to a pipeline to get it to a hub to actually sell it to anybody else, all you got to do is take a gen set to the flare and you can monetize it with Bitcoin right there, and then you can take the Bitcoin and go do whatever the hell else you want with it. And there's nothing else like that in the world, period. So to me, over time, that's going to lead to lower energy costs, broadly speaking, because it incentivizes exploration for it, as long as you can generate that electricity at a rate that allows you to mine Bitcoin profitably.
Good point. We'll go to Feather, then Chad, and then I don't know, Dark, do you want to do a lap and wrap it up or whatever you want to do?
I'm happy to keep going. I got time.
Okay, Feather, what do you got, bud?
Hey, thanks for having me up. Yeah, really appreciate this space. And one thing though that I always kind of question is a lot of times on this space we talk about hyper Bitcoinization and you know eventually potentially the end of the U.S. dollar and moving to more of a Bitcoin standard. Wanted to see what that would realistically look like. Dave kind of alluded to what I kind of agree with, and that's that Bitcoin doesn't really seem ready for full global adoption, at least the layer one. And just been thinking like, for instance, if every business in America, much less the world, decided to start paying their employees in Bitcoin, like how would that even work? Where they would have to go to the open market to buy it? How would they determine salaries? If everyone is trying to acquire it, obviously, the demand skyrockets. And so do you see literally everyone being on a Bitcoin standard as in we're all transacting in Bitcoin, or do you see Bitcoin backing another currency like the US dollar or something? And even that though, can it really, we always say Bitcoin's superior to gold because of the portability and things like that, but can the base layer even really handle that kind of volume being a reserve currency? Would love to hear
Well,
pick your brain.
Max will probably have a better idea, but I know that for a fact that there's layer two, Fedimint being one of them, layer two Bitcoin applications that settle inside of that federation, but ultimately they settle at the base chain in Bitcoin. Max, go ahead.
Yeah, I mean, to me, again, I mean, I use language, okay, that's borderline hyperbolic. I understand that, but nevertheless, Um, it's not like we're sitting back and figuring out, well, what are our options here? Let's do this, let's do that. To me, Bitcoin is like Frankenmoney. It was released on January 3rd, 2009, and it's a monster. It's like Godzilla. It's eating up all value, and it's out of nobody controls it. It's out of our control. It's going to eat everything. So it's not about whether should we do this or should we do that. It's about adapting. It's like, I use the brown bears and the white bears, right? There's a bunch of brown bears and a white bear, and the brown bears are laughing at the white bear. Then there's a huge snowstorm. Who's laughing now? Right? I mean, it's like a total change. So we have to adapt. You have to start, like, it's a seismic change. So you have to adapt. We'll figure out ways to adapt, or we'll perish, because this is not going to stop. Nothing can stop this. Everything goes to zero against Bitcoin. That's not hyperbolic. That's a fact. So figure it out, or perish.
Yeah, these are thought exercises to try to minimize pain, and maybe that's not possible, right? You either adapt or, I mean, the one thing about Bitcoin is it's with its radical responsibility for yourself and your family and those you care about to get them on the Bitcoin train. And for those who resist, it will not be without consequence. I lost hands, but is it Chad?
Sure, I'll take it. Thanks, Punch. I just wanted to share in some top-down synopsis thoughts to add to the room, and pivoting on what or adding to what you said. It is adapt or perish, right? And each of us as listeners here have the opportunity, certainly for a once in a lifetime investment, but perhaps species opportunity. And I look at when I first talked to Dark and Punch. Actually, I remember I was sitting in the car at my son's soccer. That was November last year, the year before, and we were talking. I was like, "We've got to do something. What is it?" And Bitbonds happened to pop that same day. Look at the weaponry our government now has, or the levers that it has that it didn't have a year ago. Trump promised an SBR. A lot of moves have made in that direction, but we now have Bitbonds. We know they're going to use them. They may not be first, but they're going to use them at some point. This stablecoin thing is just as revolutionary. Holy crap! And I want to go back to the individual perspective of incentives. This is your chance. This is our chance to completely, a lot of us on stage, I think, have broken free of the system. Kudos to all those. But everybody in the audience who hasn't completely broken free, this is a unbelievable investment opportunity. Dive, dive, dive. Back to some tangible takeaways here. I found that the best way to orange pill people, and I'm a machine at this point. I literally plunk down $100 bill, and I'm like, do you have the balls to do this? Here you go. Open up your account, start it. I'll take you through it. And the number of people who have actually bitten on that is very high because it's a low risk way. And this is to Max's point. Once you have a de minimis amount, what happens? You then dive deeper and deeper and wade out into the waters. And that's sort of what this is about. And I'd like to conclude with Max, I don't know if you're going to Los Angeles for Bitcoin Alpha. Are you?
No.
All right. Well, whatever I can do or anybody else on stage could encourage you to be there. I would love to have you with us. But regardless, we talked about Cynthia Loomis potentially being a attendee or something of the sort. I would love to get Max's idea to her directly, get the $1,000 account instead of into stocks into Bitcoin. I think that'd be another great way to, get future generations to start looking at this earlier. And I'll wrap there and Punch. That would be my closeout for my segment. Thanks.
Yeah, bud, thanks. And I do the same thing, but the problem is Bitcoin price doubles and then they sell it into cash again. Some will do the work and some just won't.
Yeah,
And
but let's stay there, Punch, for a sec. It's really important. It's like when I gift them that, I'm like, you can never sell this, right?
oh, there you go.
And this is a gift. This is a gift to you for the rest of your life. And that's what's the key is you can't you got to hold this for 5 years or you're gonna look. I bought and sold it, and it wasn't until my hats off to Fred and um, some other folks who've been up on stage, Max, etc., that I was really like, I can't be looking at this right. How did I screw this up? And when that lever goes, it doesn't go back the other way.
Yeah, my technique is I'll always buy your initial Bitcoin purchase back at the price you paid forever. And that seems to work sometimes. Just a point of if you're ever hosting a space, the way to get the hands back is you have to scroll all the way down to the bottom of the space and scroll all the way back up. And I did that, and I don't see any hands. So
Yeah, I hear you, Puncher.
I'd like
So
to
look,
just digress a little bit in this lull and make the following statement. Chocolate mousse is delicious and it's so easy to make. I mean, all you need a couple of eggs, you separate the eggs, create the meringue, you mix them back with some chocolate, and it's an awesome dessert. It's super easy to make. If you haven't made chocolate mousse, check it out.
separate eggs. What's
Yeah.
that?
You break the egg, you have the eggs into the yolks and the whites, right? Then you whip up the whites into a meringue. You drop the yolks into your melted chocolate. You mix that up with some sugar. Then you fold the meringue into that chocolate mix. That's it. That's it. Then you put that into your dishes, in the fridge, let it chill, and you've got a French dessert masterpiece. Now, if you're a guy, you're trying to impress a woman. If you make her chocolate mousse, it's like you're 99% home. Trust me on this.
All right, since we went there, I got to tell a story, man. So when I met my wife, we when I first met her, um, I decided to cook her dinner one night, but I don't know how to cook. So I went to the local Chinese restaurant and bought, I think it was chicken and broccoli. I bought a wok, right? I took the chicken and broccoli, put it in the wok, cut up some vegetables just so there was some dirt on the kitchen, and I presented this chicken and broccoli as if I had cooked it. I think this is a far more effective route. It worked for me. I encourage others to try the same. Puncher, you ever pulled one like that?
well, I got married at 42, so I was forced to learn how to cook, and I'm a damn good cook. I was the best breakfast guy in Pennsylvania for about 5 years running, so I didn't have that problem. So it's either sink or swim when you're a single guy that long. You got to figure it out.
See, the difference
I
now,
like it.
Dark, is that the internet exists and there's YouTube, right? And so if you want to learn how to cook, you can just go to YouTube and you can basically do paint by numbers, but with food. So you don't have to worry about that anymore.
Yeah,
Cooking
that
is
didn't exist back then.
cooking is a couple things. Cooking is proper preparation and timing. That's it. If you can figure that out, and you got to serve it hot, right? You got to have everybody ready to eat when it comes out, and your timing's on. Now the timing takes time to figure out, but it's not that hard. We're not splitting atoms here.
I'll tell you what, I did get a Traeger, and man, that makes cooking really, really easy. But I love to do grilling. I got a Blackstone and a Traeger, and between those two, man, I really have excelled in my grilling abilities. Jesse, you got any cooking tips for us today since we've migrated the show?
I do, but I'm going to bring it back. I've done a lot of listening today, and it's been just a wonderful listen. I'm going to bookmark this one, and I'm going to replay the whole thing again. But yeah, let me talk about the cooking. Max is a clever character because he's talking about uh, chocolate mousse, but he's also talking about Bitcoin. And he's a sneaky guy because he's giving us a metaphor for Bitcoin, and we're talking about it, and he didn't even have to say anything. He's talking about some ingredients that go together, and you let that ingredient chill, and then you get this wonderful dessert. And it's proven that it tastes good, and it's going to get you, according to Max, 99% there with your latest love interest. So he's giving you a model, and he's giving you a whisper that Bitcoin is this new pristine money. The ingredients have already been put in, the pot's cooking, and this is a once in a species invention, and it's the perfect recipe. So just take that all with a grain of salt, pun intended. Max, you're a brilliant man. This was such a great one. I'm gonna bookmark it, and I just appreciate this. This is the alpha.
Good.
So it's the power of attraction. It's not promotion. Never try to sell Bitcoin. Just live Bitcoin, and let the magic happen.
There you go. Drifter, how you doing, buddy? Drifter and I flew F-16 together for years. I'm sure he's had some of my cooking. How you doing, bud? You there, Drifter? Drifter,
Now we
check
can't
mic.
hear him. Hey,
Check mic.
Drifter, pop down. We'll bring you back up. Grant Cardone, how you doing, sir? Grant, you there? Grant. Okay. Well, Grant's getting ready. Dog said and Vinny
Yeah, hey guys, how you all doing today? I
doing
just
good,
had
bud.
to, yeah, I'm looking forward to meeting you all at Bitcoin Alpha. It's gonna be fun, man, and I'm actually glad that you guys were talking about Bitcoin right now with Max Kaiser saying that Bitcoin is gonna eat the world because yesterday's space we were talking about diversification and startups and whatnot, and I'm like, man, I'm a Bitcoin maxi. I don't know if I could agree with any of you guys on this diversification stuff, but talking about cooking real quick, Dark, if you got a Traeger, you got to sell the Traeger and get an egg. Because I got to tell you, man, setting it and forgetting it, digitally versus putting the coal in there and monitoring the temperature on your own. I mean, there's a deeper connection when you're the one that's like, letting the food kind of simmer in your egg. I just roasted a full bird yesterday. I got a T-bone already defrosted for later this afternoon. So I'm a big griller. And to all the single guys out there, my point of advice would be a protein. You have to have some type of veggie, and then light carbs. Any combination of those three, and she's gonna consider you a winner. So go Bitcoin and let's go.
Interesting. Doug said I started with the egg, and I wanted to shoot myself. I just can't. I'm too ADD to sit in front of a grill for an hour and monitor the temperature. Now, I am all about the digital age. To me, the egg represents a time gone by. Um, Traeger's more like Bitcoin, it's digital perfection. So I appreciate the advice, but no, I graduated from the egg to the Traeger, and it's turned me into a much better griller.
Whoa, 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 whoa. Well, that's when you get on spaces, you fire up a space, you're talking about Bitcoin, you let the smoke kind of fester for a good 35 minutes. By the time you're ready to put the seasoning on there, we're at peak Bitcoin conversation. So, it's win-win. So, no, look, at the end of the day, I mean, I think grilling is the best. I probably smoke food 2 to 3 times a week. It's the way that I enjoy cooking. But I will say that now that I have spaces running in the background while I'm cooking, I mean, I'm in paradise, man. So I appreciate you all guys, and I look forward to meeting you all soon.
I appreciate you, Doug said, and I do look forward to meeting you at a Bitcoin Alpha for sure. Vinny, how you doing today?
Good, good. Thanks for having me up. Yeah, I'm also planning to be at Bitcoin Alpha, so looking forward to meeting all of you guys. Had a few comments for Max actually. Max, you shared one of my posts over the weekend regarding Bukele getting reelected and stuff, so I thought that was really cool. And just curious if you wanted to say any comments about that. And then the second thing is you've been sharing some posts with a Bukele hat, and I really want one of those hats. So I'm kind of curious how I can get my hands on one of those.
Well, as far as El Salvador goes and what's happening there, the best thing to do is just come to El Salvador and visit and see for yourself what's going on. I'm very accessible. Where it's just come. I got a restaurant I'm opening up in a couple of months. I got my golf tournament in January. We have lots of stuff for people to do, and that's on top of Bitcoin Beach and everything else. So you just got to come and experience it to really get firsthand experience of what's happening. The hat is by a guy named Sergio. I put a lot of links to him. He's got this cool hat machine. He cranks out these hats. So it's Bitcoin 2027. Sorry, Bukele 2027. And so yeah, that's how you find them. Easy enough. But if you come to El Salvador, just look me up and I'll hook you up with a hat.
Sergio's a great guy. I met him at the Bitcoin conference. I think that was him, Max, right? He was at the Bitcoin conference in Vegas.
Yeah, definitely.
Super talented guy. You couldn't meet a nicer guy. And then Max, what are the dates of your golf tournament again? I want to, before you give the date, guys, it's going to be a golf tournament. It's going to be hanging out at the pool. It's going to be a poker tournament, a pickleball tournament. I mean, you may never utter the word Bitcoin there, but it's going to be like-minded people. And it's going to be super, super fun. I just can't wait to get down there and be part of it.
Yeah, it's January 8th through 10th. So it's the best month of the year in El Salvador. It's January. The weather's perfect. It's at the El Encanto Country Club, which is one of the top country clubs in the world, one of the top golf courses in the world. But as you point out, we've got the golf tournament going on, but it's also a pool party. And I do a thing on stage for a few hours a day, talking to people. It's like a mini conference. I just MC the whole thing myself. Then there's a pickleball tournament, and there's also this year golf, a poker tournament as well. So all these things over 2 days. We do a trip down to Bitcoin Beach. We have other stuff. We have stuff for kids. Yeah, it's super entertaining. You can just get a pool party ticket and not do any golf at all. It's like a Bitcoin conference without all the boring panels, right? I never listen to any panels at these conferences. Who does? Nothing. That nobody says anything interesting. It's all about the schmoozing at the parties and backstage. So we got rid of the panels and we just have the schmoozing.
Yeah, it's going to be.
That sounds awesome.
Hey, I was talking to beware on pickleball. I was talking to an osteopath buddy of mine. He said business has never been better. All these old farts getting out there running around like they're 20 again, and they're tearing ACLs and meniscus. He said business is booming. So wrap up and get plenty of Bengay before you head out there.
I just found the link to the hats, and I just shared it in the nest.
Okay,
Thanks,
cool.
Vinny.
Yeah, it's maxandstacyinvitational.com. Well, is the website. It'll take you to get all the information that you need.
And if you're heading down there, DM me. I can tell you some good places to stay. Max, where is that El Encanto between the beach and the city? Where is it, about halfway?
Yeah, it's about 7 miles from the city. And maybe, I don't know, that's 14 miles from the beach. And then we're expanding. So in 2026, we're going to do the Max and Stacy Invitational. We're doing one in Panama now. We got one lined up for Mexico. So we're going to do a whole Central American golf tour. And these are countries that are also being orange pilled and adopting the Bukeleism and the Bukelenomics. And so the Central America is going to become the Bitcoin powerhouse of the world. Sorry, Trump. You got the dollar, minute late and a dollar short, pal. So yeah, we're on the move.
Drifter, did you fix your mic, buddy?
Hey, can you hear me?
Loud and clear.
Oh, cool. Yeah, for some reason it just went dead when I clicked on the mic. I was just jumping up to confirm that Puncher is a phenomenal cook. When I was stuck in minimum security prison with him on multiple occasions, he would always cook up some really good food. So, yeah, great. And I'm looking forward to seeing y'all at out in California in a couple months.
Yeah, it'll be fun. It'll be fun. And the prices are going up too. I think there was a couple more tickets, and it's going up to $1,500, I believe. So get it while the getting's good. And I think 200 is the limit because that's just the limit. So there you go.
Cool. See you there, brother.
See you. What else we got? Anybody up on stage got any final thoughts? Darkside, what do you got, bud?
Yeah, not much, man. Maybe we'll wrap up today. It's been a great space, Punch.
Yeah, it's good. It's good stuff. And again, we're like, what was that game where you had to figure out who committed the murder? It was Doctor So and So and the Clue.
Clue.
Yeah, I mean that's kind of what this is. We try to find pieces of what other politicians or central bankers or whomever academics say, and then we try to piece together what could potentially be coming our way. But at the end of the day, I'm with Max. Bitcoin's going to eat everything. But in the interim, injecting the system with Bitcoin here, there, and everywhere, I think is how this is going to go down. Like Max said, it's unstoppable. It's just math, and nothing stops this train. And my sole purpose in life and doing these spaces, and I'm sure I speak for Dark and others up here, is we're just trying to get as many people, in the boat over to the next island to avoid what's potentially coming. And if that makes me a doomer, well, fuck it, then I'm a doomer.
I'm proud to.
If this is Clue, can I be Colonel Mustard?
Of course.
Yes, you can. You can be whoever you want to be, Max. All right. So it was Colonel Muster in the Federal Reserve with a candlestick,
With a bazooka.
with a bazooka. Yeah,
Let's
exactly.
hope it's a green candlestick.
There you go. Coke, how you doing? You had your hand up. I missed you, buddy.
Yeah, yeah. No, sorry. I came in late, so I missed the whole space, unfortunately. But I think we need to always remind everyone that it's no matter what the price of Bitcoin, we should never think that it's too late to start buying. I mean, the worst thing that anyone can do is to think that it's too late and start to wait. Like, I remember when it went to $500, and I thought, "Oh, it's too late now. I've missed it." And then it went to 1,000, and I thought, I've definitely missed it now. So, and like, um, no matter what your route is to try and gain more money to get more Bitcoin, like I said in the comments, at the end of the day, Bitcoin, it is the top dog. It's made it to where everyone was hoping it would make it to back in the day. And there's no way that it's going anywhere other than up. Countries are going to keep buying it, institutions are going to keep buying it. So people should never wait to see if they can get a lower price. Just keep buying, just keep DCAing, and keep doing whatever you can to get as much money as you can to buy as much Bitcoin as possible.
There's a guy who's obviously pumping his own bags, as I've
I'm
seen
not
you.
put. I'm not put. Listen, no, I'm just.
Coke,
I haven't said
Coke,
anything. You said it, not me.
Coke. That's
Uh-huh.
the accusation that flies. It's a construct. It is what it is. I wear the label proudly. All right, let's go to Feather. What do you got?
Nothing. Appreciate you having me up, and hope everyone has a great day.
Man, a few words. I love it. Drifter, you got anything else, bud?
Oh, guys, thanks. Great space. I was in and out of the space while I was working out this afternoon. Lots of good high signal stuff. Thanks for uh, inviting me up.
Yeah, brother. Well, you got to come down. You got to come down to Max and Stacy's golf tournament too. It's gonna be a blast, and I'll get you all tightened up down there. Let's go to Vinny. Vinny, yo, Vinny. All right, let's go to Jesse.
Yeah, amazing space today, everybody. This is a really important time in human history, as we've been mentioning. I just want to say, Dark and Punch, you guys are continuing to give us a masterclass on how to run these spaces and do the research, and the way you connected the banks in the beginning of the conversation, and then to get people that we have up on this panel. It's just incredible. So thank you for doing what you do. I'm taking notes. I learned a lot today. And just remember who you have in the room here and be grateful for that. You've got people that, I'm over a decade in. Uh, Max is far deeper than that. You've got some brilliant minds like Grant Cardone in the room, who's being bold, and he's already proven himself as a business person. You've got deep thinkers like Dave. You've got philosophers, and you've got people like Dark that just are starting to transcend every aspect, coming at it from finance, coming at it from philosophy, history. So kudos to everybody. Pat yourself on the back for being here, and I concur with Max and everybody else with the long-term thesis. You got to back up, zoom out, think decades. This is a once in a species paradigm shifting technology. I'll end it there.
Cool beans. And what's the word of the day? Cultural appropriation. I'm an intellect appropriator. I surround myself with really smart people, and then I appropriate their brains. So don't listen to me on anything. I'm just repeating what I've already heard. Let's go to Dog's Head. Dog's Head, you up? All right, let's go to Dave. Another big brain.
I mean, look, I think we've said a lot. the interesting thing that's going on, is we didn't talk about the SEC and crypto week and all the other crap. I know crypto is a dirty word to Bitcoiners, but the truth is that if one adopts a mental model where Bitcoin is value and ignores the bleeding of the various altcoiners who talk about, whatever, that this thing is going to be money. I'm not even going to mention the three-letter names or the longer names of that. But just if you just ignore that and you think of blockchain tech, tokens as a potential other asset class that will live or die like NASDAQ stocks do, then understanding that we are moving towards modernization of all of our rules, much quicker than people anticipated, that's undeniably a good thing. It also will make it a lot easier to exchange Bitcoin for value and to hasten the demise of some of the cartels that exist in our system. And that's sort of my message. Broadly speaking, technology, I've watched it throughout my Wall Street career be held back by regulation and by the effectively oligopolies. And it's getting very obvious that it's getting harder and harder to hold it back. And that is only going to be a good thing for a lot of the stuff that we were talking about. And frankly, it's something that people should embrace because the idea that there's this inviolate Bitcoin 4-year cycle and that we're almost at the end of the cycle and that means oops, we're not going to keep going up or things aren't going to go or whatever, or it constrains the size of the move to the upside or whatever. All these sorts of ideas eventually will end up in the dustbin of history because once something becomes inevitable, it's going to get where it needs to go. I know that sounds stupid, but a lot of the people, most people who are investing in Bitcoin now for the long term, believe it's at least 90% undervalued, right? So, at a certain point, that becomes public knowledge. It's not there yet, but if it gets there, then why do we, set artificial targets? Oh, it can't go beyond 150 this cycle because that would be breaking this law or that law. And I think it's in these spaces when we talk about this, number go up is only a byproduct, but it really is. And as I was trying to explain to a Bitcoin bear this morning, you have to look at adoption, and adoption and number go up are correlated. And we've had plenty of times when they've been uncorrelated, but like the hash rate of the network, for example, hit an all-time high last week, right? People have to think about that and all those things going on. So we've talked about a lot of topics, but I think that the most important takeaway is things are definitely moving in the right direction. And there's some really important reasons, as Max illustrated, of why it's in an important direction. That's sort of my takeaway.
Yeah, thanks, Dave. Before we go to Max, guys, Jeff and Michael, we'll get you next time, bud. We're wrapping up, but we love that you have your hand up. We're just going to wrap it. And to quote Wayne Gretzky, you want to skate where the puck is going to be, not where the puck is. That's how he became the GOAT. So knowing where the puck's going to be is pretty important. And denominating your Bitcoin in dollars, while fun, and we all throw a party when it busts through certain levels, you're still thinking with your fiat brain. One Bitcoin is one Bitcoin. And pretty soon, one day, you're not going to care how many dollars that denominates to. Max, go ahead.
Yeah, I mean, to follow up on what Dave was just saying there, we're looking at a possibility of this new world of no cartels, right? That the cartels are broken, and that's great because it leaves an incredible amount of room for imagination to sprout. When the internet first came around in the mid '90s, the first couple of 2 or 3 years was an amazing, like, Cambrian explosion of innovation and ideas, and it was great. And then the cartels came, right, and it became HBO essentially. And but I think in this case, since we're disintermediating the central banks permanently and they're being euthanized, that we may be entering into a period where the imagination has a huge, like, renaissance, like, multi-hundred-year run. So take us to a place we just have never yet thought about. When it sounds like a very interesting place to go, though.
Awesome. And a lot of these ideas get germinated behind the scenes from a really smart guy, Maryland Hoddle. Maryland, how you doing, bud?
Good. I just want to say thank you to everybody, all the speakers here. Great conversation today, but especially to you, Puncher and Dark. It's really important that we keep the free flowing of ideas and thought leadership alive. And I think we're getting away from that for a little while, and I think we're getting back to it. So thank you to both of you.
Thanks, brother. Yeah, man. I think that's a great point, right? It is about the free flowing exchange of ideas. And it's just really weird in the Bitcoin community when people try to silence you because they don't like your message. They don't like what you're thinking about. They don't like the fact that you see a better way of doing things. Bitcoin is the ultimate money, right? It's the ultimate game changer. Max says it better than anybody else, man. Uh, Bitcoin will eat everything else. There is no second best, and it's just going to be a wild period as we migrate from the broken system to a better system. And the question is, how long does it take? What are the different trials, that we're going to go through? But I think we get there probably sooner than most people think.
Copy that. All right, guys. Thanks. Have a great day. If you're young, go out and have babies. We need to repopulate the gene pool and have your dog spayed or neutered. Have a great day, guys. See ya.
Thanks, everybody.